And the idea of having a basic, financial knowledge is important whether you are an engineer or not, because finally you have to manage your personal wealth, and it's very important that you develop an interest in these sort of subjects. Share. So today we'll be discussing basics of technical analysis. Obviously, it's a vast field to cover in just about an hour. So once you can develop some sort of interest, there are enough YouTube videos and the Google University, etc. But broad idea and basic strategy I would be sharing so that you are able to get started maybe from tomorrow itself. If you can see my screen, hear me properly, maybe a yes in your chat box would help.
Yes, sir, it's visible.
Okay. So welcome everybody. And this is, I think, maybe second time I'm speaking at IIT-Roorkee. Many years back, I think I did speak here. But overall, welcome to this event, and thank you 5paisa for initiating people at such a young age, because the phase of growth at which this country is at, I think everybody should participate in whatever capacity they can in the equity markets. Now, what is technical analysis? Uh, in terms of this presentation, the way it is organized, first we'll discuss what is technical analysis of the markets. Second, I would give you a bird's eye view on candlesticks, the most basic unit of a chart and what we do. And then I'll give you a basic trading strategy for all instruments. And this is so basic that even a 5-year-old can implement. And finally, we'll discuss the Wyckoff price cycle. Wyckoff was a very famous trader in the 30s and 40s. Human greed has remained the same over centuries, and things which were discovered in the 30s and 40s are still valid today. So very easy presentation, should take probably about an hour. So I would request you to hold your patience. I don't know what is the status on Q&A, but if you have questions, maybe you can hold on and we can find some time at the end. Okay, now the first section is what is technical analysis. See, technical analysis answers the question, when do you buy? Fundamental analysis answers, what do you buy? So fundamental analysis is the study of balance sheets, cash flows, the company's business, its management, etc., etc., etc. But technical analysis looks at past trading activity and price changes, and it identifies trading opportunities seen on charts, which means that a risk reward, a good risk reward situation can be determined by looking at past trading activity, going by past action where something found support, something found resistance. It is applicable to all, widely traded instruments. Could be hogs, could be, sugar, cocoa, all kinds of commodities, stocks, currencies, anything that is widely traded, crypto, can be charted. And charting is, that sort of basic skill that even the most fundamental guys who follow pure fundamentals do have a look at the charts once in a while. And it is the most prevalent instrument to scrutinize the demand and supply of a security. Anybody who has basic economics knowledge would understand, if there is a huge amount of demand for something, the price goes up. And if the supply is very large and the demand is not all that large, the prices come down. So that is the basic logic of charting. Moving on, let's have a look at candlesticks and what are all these charts that traders they keep looking at. And if you have a basic idea of what these candlesticks talk about, the ABC of charting, it would be very, very useful if you are able to get your hands on some charts. These days, everything is free. So if you go to investing.com or TradingView, you can get these charts for free. Now, this is a bull and a bear bar. The green bar is called a bullish bar and the red bar is called a bearish bar. Each bar denotes a time period where either the bulls won or the bears won. When you have a green bar, that means the bulls won, because it is, visually quite appealing. So just by looking at the bar, I can say that the bulls won and prices went up. So you have open, close, high, and low. And similarly, on the bearish side, again, the high is uh, above the low, and similarly, the open also is above the close. So that is how you look at a, a bullish and a bearish bar. What is this 55%? In case the market is closing at its extreme, a good place to put your stop loss, where you would say that the bullish bar or the bearish bar is losing its bullishness or losing its bearishness, is this 55% zone, which, if the red color or the green color goes below 55%, then you would reevaluate your thesis that the bulls are winning or the bears are winning. So that is where you would reconsider your opinion. Now let's see what are the variations of this. Now what happens here is that you have this green bar and your first stop is at 55%. Now, is just one bar enough? In technical analysis, one bar does not often give you the complete information. You need a second bar for confirmation. So the moment you get a second green bar, you would buy, put your stop at the 55% zone of the first bar, and that would trigger you in the trade. Sometimes what happens is that you get this one big green bar and there is no follow through. So very important that you find follow through before you act on signals. Similarly, on the bearish bar, you need a follow through red candle, and that is the point to act. Now, at this point, I'll give you a bit of information on why we use a one bar stop. The idea here is that this is not a perfect science. So the plan is that if you lose hardly a bar, but if you win 6 to 8 bars. Okay. So 35% of the time you are losing 1 bar, 65% of the time you are making 6 to 8 bars. So by definition, your system works. Plus, you add to winning trades. So that is how you skew the system in your favor. Hitting of stops is very normal. One thing I would like to caution you today, some of you may probably go further and make a career in trading and technical analysis. In the markets, people are wrong all the time. So don't put yourself under judgment thinking that if you are wrong, heavens have fallen. If you are wrong, but if you are not wrong for long, that means that your capital is safe. If your capital is safe, you will be alive for the next trade. Now, again, this is updating of stop. So once we start initially with a 55% stop of the first bar and you get enough of the green bar on the second bar, the stop gets updated to the low of the second bar. What is the idea? The idea is that your location is so good that the market keeps going in one direction and you are able to quickly update your stops. Now, some people may think that this stop is too close by. The idea here is to have close stops, at least at the beginning of a trade, because the trade needs to move in your direction quickly and sharply. If a trade is just hanging around and moving up and down and choppiness, then possibly there could be a problem with your entry. If there is good demand in this zone, you will see multiple green bars happening all at once. So what happens is that this green bar, the first one, is called an initiating bar. So possibly before this bar, what you have is a congestion zone, a sideways type of zone out of which this green bar has emerged and that has given you a signal. Similarly, on the red bar, what you do is once you get enough on the second red bar, you can update your stop to the high of the second red bar. Now, once these bars close at an extreme or very near the extreme, you can say that the bulls or the bears are in absolute control. This is the most confident the bulls or the bears are when they are able to close a bar at the extreme. These are, again, green and red bars, but the closing is not at the extreme. It's a bit off the extreme. So it is a bit worse than absolute control, but still good enough to act if you get follow through. So full control and absolute control are bars where you are able to act. Now this is weakening control. The green from the top has come off quite a bit and the bulls have weak control here. So you would avoid going with these sort of bars, both in the bullish and the bearish case, because in the battle, the bulls have not stamped their authority over the bears, and similarly, on the bear case, the bears have not really won the battle. And this is the worst out of all the cases where the bulls and the bears have not been able to hold even 55% of the entire bar. So this would in fact mean that the bears are in control on the first bar and the bulls are in control on the second bar, because they were able to take the prices to the other end. But this should be done with confirmation. Confirmation means the breaking of the low on the bullish bar and the breaking of the high of the bearish bar before you act on this sort of information. So this gives you a basic idea of what these bars depict. And this is 100% bears are in control and 100% bulls are in control. If you see this sort of bar, particularly at the end of a rally, the first one, that by itself denotes that breaking of the low should allow you to act on the downside. As you can see here, this was once a completely green bar, the first one. But the bears came with force and were able to close the market very near to the low point of the day. Similarly, on the bullish bar, again, previously the bears were able to close at the day's open. Here, the bears were able to close the market below the open. So this is an even stronger bearish bar than earlier. So the first bar you can see is a very bearish bar, particularly if it occurs at a good location. Good location means after a rally. And similarly, the second bar, if it occurs post a decline, is an extremely bullish bar. Where do you put your stop? You put your stop at the highest point on the first bar and below the low of the day on the second bar. Now, let me give you a list of buy events. Now, the first bar here is a strong green bar, which means that the bulls came in at the open and just kept on taking the market higher and closed it at the highest point of the day. This bar should differentiate itself from the last 10 to 15 bars and should stand out. So that would allow you to chase this bar beyond the high point, because we will always act on confirmation. The second one is a bullish bar, but the bulls were not able to close it at the extreme. But still, if it occurs after a decline, it is a decent bullish bar, and uh, the bulls would buy above the highest point. Now the third one is called a twin tower or a tweezer top. So here you had a strong red candle. The bears took the market down, closed it at the lowest point, but immediately were cleaned up by the bulls, and the bulls wiped off the red bar, and actually the import of this total bar is a bullish bar. So again, beyond the highest point, you would look to buy. And if you add this third, twin bar, you get the fourth bar, which is a completely bullish bar. If you see this bar, you have to go in terms of buying because this is as bullish as it gets. So these are buy events. Now, one thing is the buy event. Second thing is location, which we will have another webinar to do that. But right now, I am just giving you events which should allow you to buy. Again, you have a big red bar, but it is being cleaned out by multiple green bars. So even this is a buy event. Similarly, you get these two pin bars, which are clearly bullish events. The one that is green is more bullish than the one that is red. And finally, you have a, a bar called a doji. A doji bar is a bar where open and close are the same. A doji bar is an indecision bar if made post a rally or post a decline can often lead to a reversal. Similarly, you have these sell events and very similar kind of you know thing based on the buy event. The big red bar means that the bears came and closed the market at the lowest point. Similarly, the second one, it was a green bar, but bears came in and closed the market lower. Similarly, first bar was a green bar on the third event, but it was completely cleaned out by a red bar. So again, these are different types of events which make you see whether the bull or the bear is winning. So this is step one in any kind of analysis, that you need to see who is winning in terms of the battle of the bears or the bulls. Now this is the reverse of what we saw earlier. Big green bar cleaned out by multiple red bars. And then you have these two pin bars which close near the lowest point. The red bar here is stronger than the green bar. And finally, you have a doji bar, which is the seventh event. So I have given you a total list of 14 events which you need to look for on any given chart. Now let me give you a very basic strategy which you can use tomorrow morning if you are interested in the markets. First of all, it's very important to see what kind of chart you want to look at. All technical analysis works in trending stocks. So first of all, find the right kind of stock. In a wrong stock, technical analysis will not work as well as in the right stock. The right stock starts from the lower left hand corner and goes right up to the highest right hand corner. So first is I am giving you how to do top down analysis. Look at the trend of the market. Market, I would mean Nifty or Sensex. Then look for the strongest trending sector aligned with the market trend. If the market trend is up, look for the strongest uptrending sector. If the market trend is down, look for the weakest sector. Then look for market leaders in that strongest or weakest sector. What is a market leader? Like in the energy space, the market leader is Reliance. Like in the metal space, the market leader is Tata Steel. So choose the best trending chart in the best trending sector in the direction of the market. So that would mean the odds are in your of market odds are in your favor because 50% of all stocks they move in the direction of the market, 30% they move in the direction of the sector, and only 20% of the stocks they move according to their own. Use two moving averages. Now, what's a moving average? An individual bar is a photograph. A moving average is a movie. So basically, the moving average gives you equilibrium point for reference to see how far away you are from either uh, you know the equilibrium. Are you oversold or overbought based on some kind of equilibrium? So let me show you what I mean. Now this is the Nifty chart. Okay. As you can see here, it is continuously making higher lows and higher highs. This is called a trending chart. Okay. If you look at it from the doorway, it's clear that uh, this chart is trending. Now you have 10 and 20 EMAs which are placed. So each time the price comes and touches the 10 and 20 EMA, as you can see on the arrows, that gives you a buy signal. Again, this is a ITC chart where you can see it is a trending chart, and each time 10 and 20 EMAs are touched, you get a buy signal. Now, this is the kind of chart that you want to avoid. Why? Because it is choppy, it is moving up and down. The moving averages are not moving consistently in one direction. You have 5,000 stocks, not necessary to meddle around in a sideways type of stock. Again, this is a sideways stock, so you need to avoid these stocks. Pick out the best trending stocks and trade only on those stocks. Now, this is the metal space. As you can see here, in an uptrending market, the metals are doing very well. These days, you must be aware what is going on in Ukraine and Russia. Russia is a major producer of metals, and hence, metal sector is doing extremely well. So based on this information, you should be looking for opportunities in the metal space. Also, the energy space is trending because Russia is also a major producer of oil and gas. Again, you can see each time the price touches the 10 and 20 EMA, you get a buying opportunity. And each time the price moves away from 10 and 20 EMA, it gets snapped back towards the moving average. So it's like a dog and a leash. If a dog runs away from the leash pulls it back. Now this is Tata Steel. We have identified the market trend. We have identified sector trend. Now this is the individual stock trend where each time the averages are touched, you get your buy signal. This is Reliance. Each time the 10 and 20 EMAs are touched, it gives you a nice buy signal. But because the market trend and sector is in favor as well. Now let's talk about the final topic, which is the Wyckoff cycle method. It basically is the psychology of the stock market, and it's a good thing if you have a basic idea of which phase your stock is at. Now, here you can see there are basically four phases of the market. The first phase is the accumulation phase, then you have the markup phase, the third phase is the distribution phase, and the fourth phase is the markdown phase. If you apply it to an individual stock, this is how these different phases look like. In the first part, you can see accumulation. Then you have a phase of markup where stocks go up. The third phase is distribution. And finally, the fourth phase is the decline, which is the markdown phase. Again, one more example, accumulation leading to markup, then distribution, and then markdown. What is the feature of accumulation? Accumulation is generally a sideways range which is formed and institutions buy quietly. What do you mean by quietly? That means they will not allow price to spike up and to let people know, or to uninformed traders, that something is going on. So they will keep the price quiet, and every day the market is flat or going down, they will try to buy. The public at this time is unaware that major buying is happening. Markup phase is what follows accumulation. Small players and traders take notice of the uptrend and they jump on board. Aggressive short sellers are forced to cover, and that further fuels the uptrend. So often, once a stock has been accumulated by the large players and all the supply is soaked up, the market gets into a markup phase. For individual traders and smaller players, this is the best phase of making money. Once a stock or a sector comes out of accumulation, that is where they should try to get in. Distribution is once stock has become very expensive and institutions are beginning to sell their holdings, and uninformed traders continue to buy thinking that prices will go up further. After this phase, institutional traders may short sell also in the markdown phase. So this is the euphoric phase which happens where the larger players are getting rid of their holdings. The markdown phase finally is the phase that follows distribution, where institutional traders are short selling and they are also getting out of their holdings. Uninformed traders, they also sell in panic, and the downtrend gains steam. So this is the final phase of the market. And once all this selling is done, again markets go into an accumulation phase. So these are basically the four phases, and it is possible for a trader to understand which phase the market is in, and his strategy should be based on that phase. Now, finally, technical analysis is a method to define risk reward. It is not a predictive science as TV channels would make you believe. Also, it is not an exact science. It is more an art than a science. So the scope of being wrong has to be there. The problem sometimes with engineers is that they are very perfect to the second decimal. You cannot show engineering in technical analysis because the same thing, the same scenario developing in the same manner will behave differently at two different points in time. So the scope of being wrong has to be there. The problem with our education system is we target 95%. Technical analysis is not 95%. If you are right 65% of the time, that's fine. So in life, in technical analysis, 65% is what you should aim for. Instead of being exactly wrong, you need to be probably right. It's best used once you have macro triggers. What's a macro trigger? A macro trigger could be a war, it could be inflation, increase in interest rates, anything that changes the flow of money. So once you have these sort of extra ingredients in your favor, technical analysis tends to work much better. Obviously, these days you have AI and all kinds of algorithmic trading, etc. But finally, fear and greed remains the same. These days, from my time where, everything was kind of manual, machines have taken over. So people of your generation should try to understand when the machines are in play. Machines have no emotion. Once the machine gets on the job, it can basically take out any sort of resistance. It can keep going for 10, 12 bars consecutively. So with time, at least I have learned uh, when do you have the machines at play, and that is when you press on the gas pedal. So innovation is happening continuously in this field. So as engineers, you should try to use your engineering skill along with technical analysis and come out with better and better systems. That should be it. You've been a good audience. Thanks for coming.
Sir, I think that we can continue with the question answer session for a while Parth sir is joining.
Okay, go ahead. I can't hear the question, or I can't, or the question is in chat box. Hmm. See, technical analysis works in all widely traded instruments, including crypto. Yes, crypto is volatile, but these days everything is volatile. Sir, I would appreciate if you don't go stock specific, because then there is no end. And it is not appropriate for me to publicly talk about stocks. Deliverable volume you can track on the NSE site that is available. Not audible. Yes, it is end of day. Delivery happens only end of day. Yes, commodity trading is available. Sir, trading prediction is not appropriate. Why? Because once you get into that trap of predicting, then you will not cut your losers. You can make your algorithm and maybe you can test it out. But in my experience, this is not a business of prediction. Well, when things start to collapse, like you saw 2 years back, that is phase four of the market. Sir, there are 1000 indicators. You have to see according to your system, your strategy, which indicator is appropriate for you. Sir, I cannot tell you how many days exchange will take. Then that you have to find out from the exchange. Because, sir, options trading needs less money. And see, people who lose in options buying are the uninformed traders. If you have a proper strategy, risk management, you can make money in options trading. See, you should start from equity investing, then try out derivatives, because derivatives is a risky instrument. Plus, it needs capital. So, first, try out things, try out your system. Unless your method is proper, you will not be able to make money in any instrument. Well, make a portfolio of 10 to 15 ideas and then see what happens. Start small, go on adding. Sir, I have said earlier also, I don't want to comment on individual stocks because public comment is restricted by SEBI. Sir, 5 paisa people will be able to tell you better. See, first thing is to have an idea, to, have a theme that you want to invest in. So themes, for example, could be the digitization theme, the internet theme, the API theme, the PLI theme. Sir, I don't do binary trading, so I can't advise on that. Everything is available. You have to assess your risk. Do you want to take the risk or you don't want to take the risk? Good IPOs are worthwhile, but loss-making IPOs are not good. Things like Zomato, Paytm, Shaytm, I don't think these were great IPOs to begin with. So small caps have higher risk. So unless you understand a company, and small caps are more company specific investments, and you have to be ready to lose 50% also, because when come down they come down 50 to 70%. Well, practice. Listen to me very, very carefully. Unless you practice and you practice and you practice, it is like, trying to bat like Tendulkar with 3 days of practice. You have to practice all the time, many years, to become good at something. You are doing engineering, you are here for 4 years. Plus, you will go out, work further on engineering. So, everything takes time. Sir, penny stocks is a bad idea. First work, first collect capital, and then start investing. Till then, learn. Hmm? Okay, I guess we're out of time. So that should be it. Thank you for joining.
Fine, sir. And I think now Parth sir is available to us. A very good evening to you, sir.
Am I audible?
Yes, sir, you are audible.
Very good evening. Hi, Mr. Ashwini Gujral. He just left. Okay. So, guys, my name is Parth Shah. Uh, I am currently working as a product manager at 5paisa Capital Limited. I'll just introduce myself a bit more so that you get the context whom you are listening to. So, uh, I have been a trader for quite few years in currency markets, stock markets, basically equity markets, currency markets. I really trade much into the currencies, and that includes the cryptocurrency market as well. So I have quite few years of experience in trading into cryptocurrency market as well. And at 5paisa, what I'm doing is I'm building the trading platforms and trading products which are useful for intraday trader or investor or any kind of trader, basically. So here I'll be letting you all things about what does 5paisa offer with respect to the trading platform, what kind of trading technology we are into, and what kind of product offerings are there with respect to 5paisa, what all are the front ends, how can you trade using the multiple device, may it be desktop trading application, web trading application, or mobile trading application, how easy is the trading, and moreover I'll be taking you quickly through few part of derivatives trading, how it works, but moreover that would be explained by the next speaker. So I'll be not diving deep into it, but I'll be taking you through the same to so as to give you the context. Since all of you are IITians, so I really think that derivatives is a kind of basically a set trading technologies which you should use and trade more into it. The old reason being, there are so many tools available with respect to the same, and at some point in time, you can use or elaborate your strategy, backtest it, and have a automated trading infrastructure ready as well at your end using our open APIs or multiple other things. So I'm sharing my screen. Okay, it's screen one, whole screen. Hello.
Yes, sir.
My screen is visible, right? Now.
Yes, sir, it is visible now.
So let me just get back to this. Okay. So this is 5paisa's web trading platform. I don't know. Okay. I could have it. Okay. This 5paisa's web trading platform. On left hand side, what you can see is a heat map. A really good tool to quickly know what is going into the market, how many stocks from Nifty 50s are currently into reds and currently into green. So how many of the stocks from the Nifty 50 are advancing or declining? And that is color graded based on the percentage change. So if you say some stocks is declining more than 3%, then it is marked as dark red. Lower the volatility, the color grading is according to the same. So this is one of the thing for quickly to start up with whenever, since I understand you guys are from the technical side of are from the technical side, and this is going to be new for you all guys. So I'll be briefing about what things you should look at whenever you open a trading application. So first thing you should look at how the market is going on. So the trends in market, how many stocks are advancing, how the index is performing. This is the basic thing which you should think through before taking any of your trades or before making any decision with respect to trading. So market, basically index, plays a very important role. Those are benchmarks. So you always should look at the index with respect to the stock which you want to trade, right? If you want to trade into banks, basically if you want to trade into private banks, then you should probably look at bank nifty as a benchmarking index, how it is performing today, what was the performance in past few days, and you should analyze its charts and uh, more about technical analysis you can do over the trend of bank nifty, and then you can make the decision with respect to the constituent of that particular index, right? So similarly for top 50 stocks, blue chip stocks, you can refer to Nifty 50. For pharmaceutical stock, you can refer to Nifty Pharma. So there are multiple such index which you can refer to. And similarly for trading into options, you should always look at the volatility index, Indian volatility index, which is called as Indian VIX, right? That will give you the idea about how is the volatility in the market. If the volatility index is higher than 15, so India VIX, if it is higher than 15, that it means that the market is highly volatile. If it is less than 15, that means it is the market has a low volatility at this particular point in time. And then you can decide on what kind of strategies you want to execute with respect to the same. So coming back to our platform, so these are basic. Whenever you will log in, you will find this particular platform. On left hand side, we have the watch list where we have listed all the stocks of Nifty 50 as a master watch list. You can have your my stocks, all that you have invested would be seen here. You can have your custom watch list, which can be made. There are 3 particular custom watch list where you can add stocks of your choice, which you want to make observation on day-to-day basis. So you can add or remove the stocks from this particular watch list. So say if I go to Indian Energy Exchange, IEX as a stock. So whenever I want to make a decision for investment, what I'll do is, if I am an investor, I'll look at the fundamentals, technicals of the stock, what is the trend of the stock. I'll look at the charts. I'll look at how it is performing today. I'll look to the news which are coming with respect to the company. And moreover, I'll be looking at the basic details with respect to the stock. So all of this particular things are already provided in a consolidated format on this particular screen, which we call as company info screen. The same kind of screen is available on the mobile application as well. So if you see here, this is last traded price, this is the actual rupee change which has happened from the previous closure till date. Then this is the percentage, basically the days percentage change as compared to the previous closure. So this shows that the IEX stock has advanced by 4.9 rupees as compared to previous day closure by 2.14%. So we have given the functionality to add or remove the stock here from watch list. So you can just click here to add or remove. So if you see, you have the market depth to understand how many orders are currently pending into the market. The market depth is a source which defines how many total quantity of orders which are pending into the market and yet not executed, right? It is yet to be executed. That will give you a brief idea about there are more sellers or more buyers for the stocks for this particular day in real time. So since the market is closed, this is what you see. But when the market is open, you can see the depth up to 20 market depth, which is called as level 2 of depth, right? You can see how many buyers are standing at what particular price, what is the volume of the same. And the same is what you can see in 5 market depth. So this is specifically with respect to the use people are do to understand what kind of trades which are going to happen and how is the book look like, a trading book look like. Then we have the next section which is called as market trades next to it. So this tells about all the pending orders which are there into the market, while market trades tell you about the trades which has actually been executed in the market. So you will not find this on any another platform. We have just recently integrated this particular functionality where we tell you about what is the trades which are happening in real time in the market. So tick by tick data is being floated here. Every single second, this keeps on streaming in live market. So you are much more aware about what is happening in the market. And then we have the market depth visualization. So this is the consolidated visualization map, or I can say the chart. We call it as market depth interpolation chart as well in technical terms. So this chart defines you about how many. So as I said, the market depth tells you about how many buyers or sellers are still standing into the market with respect to their pending orders. So the same can be visualized with respect to this tool. This tool will tell you, say on price 234.9, total number of order to be executed, yet to be executed is 65,061 quantity. So this is consolidated, or you can say consecutive quantities, cumulative quantities here, and the same is on buy side. So this will help you to give you a very clear picture that there are very less number of sellers as compared very less number of buyers as compared to the sellers. So you can make the decision that stock might probably will move down from here. Then you have the details where you can see the open, high, low, close, previous close, basic details with respect to stock. Then you can see the returns of the stocks in past 1 month, how the stock has performed. Then we have a technical particular space here where you can actually see the technicals of this particular stock. So if I click on it, then it will give me all the technical details with respect to the stocks, like what does exponential moving average look like? How is the simple moving average would be looking like? What are the P1, P2, P3, the pivot points? So where the stock is going to resist, where is the support for this particular stock? So there's all things with respect to delivery and volume. Everything you can see here, right? You can also do the price change analysis with respect to volume. Then you have beta of the stock, 1 month, 3 month. So similarly, you can see the overview, 1 year price trend of the stock. You can see the SWOT analysis for the stock, for the fundamental analysis. Then you can see the financial for the stocks. Then you can have the technicals for the stock and so on. Then you have news deals with respect to stock. So these are the recent block deals which has happened with respect to the stock. So you can see that. Then you have the corporate action, shareholding pattern of the company. Everything can be seen at one particular place. Then this is the intelligent idea. So we usually suggest that so you might have heard of a platform called a small case. So which gives you the model portfolio with respect to any particular idea you want to invest into. Say if you want to invest into energy stocks, then it will give you the idea about what all stocks bucket you should invest in. It will create a model portfolio for you. So it has the standard model portfolio in place which you can invest into. So energy tracker is one of the portfolio where the IEX is a constituent share for the same, and it has its own returns. If you have invested in this particular uh, portfolio 1 month bank, then you might would have then you would have got 1.27% as a return. Then you have the news where you can see what are the trending news or recent news with respect to the stock, and same can be seen. And you have the similar kind of stock that the people who have bought. So this is our own intelligence which is built in house, where we analyze that those people who have bought Indian Energy Exchange, what other shares they have bought with respect to the same. So those people who have bought Indian Energy Exchange, they have bought PB Fintech or Tube Investment or Century Plywoods, any such shares. So that is one part of it. We have given upfront option of adding this particular stock into the baskets. So we have the basket order functionality where you can add the stocks into the basket and then execute the basket. So basket orders are moreover like a cart orders. So everyone is very much used to with respect to shopping into the carts, right? So adding your orders to carts and then checking it out and paying for those orders, and then you get the delivery. The same similar is the concept here, where you can add the preferred stocks you want to purchase into a basket and click on execute button to get all those stocks executed and bought basically. Then you can also use this basket orders for deploying some option strategies or future option strategies or arbitrage strategies. Multiple things can be done with respect to the basket orders. For the investors who want to invest in a particular time frame and consequently, so basically who want to systematically invest into one particular stock on a particular time frame or at particular frequency, then stock SIP is a product for you guys. So if I wish that I want to purchase IEX every weekly, then I'll just go to stock SIP and I'll start saying that I want to invest one quantity of say I want to invest 10 quantities of IEX every month on 28th of the month. I'll click on start SIP. It'll give me the confirmation and I'll click on place order. That's how easy it will place your order with respect to stock SIP. On 28th, the order will be placed at 9:30 a.m. in market and I'll get my 10 shares on every month basis. So this is a very good product for systematic investors, and There you have the dashboard for stock SIP where you can browse what all stocks are there and what we recommend for the purchase of SIP. And then you have the request book, whichever you have applied for. So recently the IEX, which I have started just now, can be seen here as ongoing, right? So this was the stock SIP product. Going back to the watch list, then I have the info tab. This info tab basically tells briefly about the fundamentals of the stock. So it evaluates the stock. Uh, so this particular integration is done with MarketSmith India. So those are our vendors who provide this information. You get the complete evaluation of the stock, the financial summary of the stock. You get the reports with respect to the stock, research reports. Then you get the financials, key ratios. So basic all financial which an investor would like to look at, everything is available at one particular page. So you get the estimates as well, that this is forecasted to either go to 305 or maximum on downside 178, and in median it is 227 rupees. So that's how you get the estimates. You get the EPS and sales estimate as well. You have the checklist with respect to the known investor, influencer investors like Warren Buffett, William O'Neill. So you can see the ratings of the stock based on their methodology of investment, if that fits into it or not. So according to Warren Buffett investment strategy or checklist, it is passing 15 of the checklist points out of 16 checklist points. That's how you can evaluate the stocks here, and there are multiple such things with respect to the same. So I'll just close this. So that's how for an investor this is very much helpful. Then you have the orders and position tray page where you can see your orders or the position which you have created. Then we have the VTT orders, which means valid till triggered. So so it is very difficult to see or trace a particular stock for a very long period of time and enter into that particular position for that particular stock at particular price. So see, if I am looking at IEX, I say I want to invest in IEX only when the stock price reaches 200 rupees. So what will I do if I place a normal order? Say by pressing F1, you can, so we have keyboard shortcuts also implemented on this platform. You can have the multiple windows, buy sell windows, and you can drag it. You can use it. So pressing F1 will open the buy window, and you say I want to purchase this particular stock at 200 rupees, which is out of today's daily price range. Or say I want to purchase this for 180 rupees whenever the stock price reaches 180 rupees. And say I want to add the stop loss as well, where I am saying stop loss should trigger if price goes below 170 rupees. And I have the target profit in my mind as well. So I say that I want to sell the stock once it reaches 200 rupees. So this whole defines that my position will be created whenever the stock will reach 180 rupees. The position will be closed with a loss of 10 rupees. If it goes below, so it goes at 170 rupees, and 20 rupees profit will be booked if the market goes at 200 rupees. So that's how you can place the order. I'll make it as a market. Okay. So stop loss price is 170. I'll keep it 169. Target price at 200. Sell it at both are selected. So okay, it's giving some error. Let me check this. So that's one thing. Might be I'm doing something wrong. It is out of daily price range. That's the market is currently closed. That's the reason. Okay, so that's one thing. So that's how you can place the VTT order as well. Now I'll just quickly gaze you through the portfolio. So if you have done the investment, you can see all your investment at one place. So whether it is equity, mutual fund, FNO, currency, commodity, everything can be seen at one particular place. And you can see what all are the gainers in your portfolio or losers in your portfolio. And similarly, you can see each and every asset class wise portfolios as well, for equity, for mutual fund, for FNO, if you have any position, and for commodity currency. So if I want to show you the same, say FNO, how it looks. So if you see this particular, so that's how you can see for FNO. This was the position today, transaction value. So everything is visible here, and that's how you can see, you can visualize on a pie chart as well. Then you have funds ledger page where you can see your fund position, your cash, your collaterals, your margin utilized, your cash, everything. And then you have the ledger where you can see your ledger statement with respect to the bill posting, charges, everything. Then you have the reports where you can see your consolidated reports of realized gain, loss, booked profit and loss, tax reports, holding statements. Then on order and position, as I said, you have VTT stock SIP basket, and then you have the holdings as well here. You can apply for buyback if any going on from here. And then you have the user menu here where you can see the third party apps as well, which are connected like Small Case, Sensible, Smart Investor, Tradersmith, Streak, Screeners. So everything you can see at this particular page. You can, if you want to invest in gold, insurance, if you want to purchase insurance, or if you want to invest in IPO, US stocks, wealth, everything is available on this particular platform. The whole mindset of building this particular platform was to give everything at one particular place so that the investor or the trader do not have to go anywhere else on any another platform, and can have a one-stop solution with respect to their financial needs. So I'll quickly take you through the option chain as well. That is as well very interesting. So if say I want to see the option chain for Nifty, right? So let's see the option chain. Today was the expiry, so you can find the option chain here as well. So let us check the option chain for 31st March. So I'll click on all. So these are the basically close to market contracts which are being shown on the first go, and then you have all other contracts which you can turn on by clear toggling to all, and then you can buy, sell everything directly from here. So if you click here, you can buy, you can sell. If you click on watch list, you can add this particular contract to the watch list. Everything can be done, and you can set the price alerts as well for your scripts. Then we have ideas page where we tell you about what is IPOs which are going on, what are the hot stocks which people are viewing or purchasing or trading to. So these are currently, this is based on our data analytics. Then there are the long-term ideas, short-term ideas which you should invest into. These are the recommended funds, mutual funds which you should invest into. And then, as I said, the portfolio ideas, model portfolio ideas, which are derived from these small cases, can be seen here, and you can invest on one click. So that's all about our web trading platform. I'll quickly make you go through our desktop trading application. This is more advanced application with respect to the trading. The whole point for developing this particular application was with respect to high-end traders who are very frequently or trading with very high frequency. This platform is particularly for them, as well as a normal trader can also use this platform. So if you see the left hand side is the watch list, you can directly search for any option contract, say 17,500 Nifty option I want to search for 20. Okay, I'll take the 31st one. I'll just click on it and the same will be added here. I'll just added in last row. Okay, so this is the option chain where you can see the performance of the options. Then you have all the basically open interest related data, bid, ask, price change, LTP, everything. And you can see the option Greeks as well. That is the great test part, and that also in real time. So very less brokers in the industry provide this particular data with the OI analysis, that too on the chart. So you can see where is the highest open interest in market, so that you can trade onto the same. So you know that which particular strike price is traded the most. That is one thing. Then you have OI change and OI percentage change chart. So this can be a visualizer where you can see the multiple data points. So this is the option chain which you can quickly use to make your trades, where you see the option performance and everything in real time. And you can keep this floating anywhere else, or you can dock this as well somewhere. So I want to dock it at bottom. So I'll do that. But as of now, we don't want, I'll just close it. Okay, so right hand side is the real-time scanner. So Mr. Ashwini Gujral would have just taught you about the technical analysis, right? And moreover, the candlestick type, and that's how. So it is always difficult to identify in real time that this particular candle has formed and so accurately, and you cannot see multiple charts, or you cannot evaluate, say, 15 stock charts at one particular point in time. And that's the point where you need a automatic system which can evaluate the same for you, which can tell you that here the doji candle has formed, or here the hammer has formed, or inverted hammer has formed, so that you are aware about that. Here is the point where you can make the trade. So the stock screener is again a similar kind of tool here, where you can set the group which you want to basically want a scan to. So I can create my own group as well. So it has a multiple option of selecting groups. So say if I want to select, I can select Nifty 50. So these are exchange defined masters which we have already preloaded, so that you can select from. And then you can have the user defined, exchange defined, BSE, industry defined, business house wise, holding wise. There are multiple things in it. So currently, if I say I want exchange defined Nifty 50, and this is basically if you want the range bound stocks, then you can include the previous close as well, but I don't want it as of now. So that's it. And I have the selection where I can select what all patterns I want to scan to, or what all indicators I want to scan. So I say all the stocks which have above pivot, or have broken the resistance one, or broken the resistance two. I want to see all those stock, or broken the support, or where the hammer has formed, or doji has formed. So as soon as I click, so I have selected all. So I'll select all again. And if I see the results, so I have already started it before this session, so that you get some idea. So if you see here, I'll just expand this a bit. So if you see the screener on 15:59, so we'll just check from here. So on 15:59, 11 second, DCS has crossed weighted average price at 3734. Or if you can see here, so Sun Pharma has already exceeded the previous day volume at this particular point in time. And similarly, if you can see, Reliance has made the gap down than previous day's low at 2523 rupees. Then you can see with respect to, say, let me just see if some candlesticks pattern has been. So Coal India has made a bearish engulfing. So all this can be tracked in real time. So this will keep on streaming whenever the market is on. And once the market is closed, then you can just see the historical data as well here. So if you see, so say if you are watching the chart of say Infosys, I'll just take Infosys chart or some simple charts so that everyone understands it. So say Infosys 15 minutes chart, or say I'll take a 1 day chart itself, daily chart. Okay. This is basically Infosys daily chart. You can see the news which has came at this particular day. Now this chart has multiple options that you can add. You can add, but obviously you can add the studies on this chart. Apart from this, you can have the toggle between line, bars, candles, etc. Then if you are making a drawing, then you have the magnet symbol as well. Okay, so patterns. So since I said either you can track the patterns directly from the scanners, or if you are looking at chart and you don't really want to get into evaluation of each and every candle, this will do it for you. So say I want to, I'm selecting all. I want to see if any particular pattern has formed or not. If you see here, uh, evening star pattern has formed here. So it has highlighted. If you see here, a dark cloud clover has formed here. So similarly, if you see here, evening star again has formed here. If you see here, dark cloud clover. So multiple chart pattern can be found out here directly, will be highlighted to you whenever it forms. And you can take the trades based on this particular candlestick pattern as well. And then you have the volume to make it more meaningful. So a single making a trade based on a single study would not be the right practice. So always keep in mind, a single study cannot always define that stock will move up or it will move down, or it will have the trend inversion or not. So you always have to apply multiple studies at a single point in time to make your decision that yes, this stock is going to go up or it is going to have the bearish divergence. So say I am including RSI to look at. So it gives me a detailed box where I can actually define what all parameters I want to consider for RSI. I'm just adding this RSI as it is. So if you see the RSI is added here and you can track the RSI here. So if you see whenever there is a crossover, the stock would have moved down, and wherever there is crossover upside, then it would have gone up. So this works better in case of daily charts. So that's how you can define. Then you can add multiple studies as well. Now, a very good thing about this particular chart is I'll just unpin it, make it full screen. So very good thing about this chart is you can trade directly from charts. So this is a trading tool. This helps you to make a trade with your mouse. On on a right click, it will, sorry, on a left click, it will open up the buy window, and on left click, right click, it will open the sell window. So you can place your trade directly from here and the trade will be executed, and the same trade would be marked on this particular chart. And then you have the studies, backtesting, everything. So if say I want to backtest MACD, I'll add the MACD onto the charts and say I'll go to Strategy Pro. So this is particularly a chart-based strategy backtesting tool where you can input the signal lines for the strategy and then you can trade. So I'll first add the crossover signals as well on this chart. So signal crossovers on the, I want the crossovers on MACDs. So I'll get the signal crossover added here. Okay, I have added it on MACD chart and I'll add it again on signal crossover on price chart as well so that it is visible. So so it is visible for you guys. It will give you the indicator here to buy, here to sell as per the strategy. Now, say if I want to backtest this strategy and I open the strategy pro, which will help me to say whenever the signal crossover happens, right? I want to enter into this trade on the buy signal and I will exit the same on again the signal crossover, which is fine. Again, wherever the phi has happened, that means it will open a downtrend. And again, I want to exit on crossover. So somebody has asked that if this is the paid feature or this is the free feature, the complete EX is a free of cost, and all the 5paisa customer can download this desktop trading application and use all the tools with respect to this application. So if you see the lines have formed here, and I guess I should move this. So if you see the cumulative profit loss can be seen here directly if you move it across here. And moreover, you can do more back testing as well. How to do that also I'll just show you quickly. But before that, I'll just quickly take you through one thing. So let me complete this first. So strategy wizard. So this strategy option strategies. So strategy trade station. So I can always select the group. Say I want to analyze this strategy on this particular Nifty 50 group. So I have created this strategy but haven't saved it, but I'll just take this very quickly. So say I want to see the super trend strategy. So if suppose I am super trend strategy, if I am placing it on the chart, I want to see if I would be trading on only on the basis of super trend strategy and how it would have performed. So I say daily time frame पे लेते हैं. So I'll process this strategy predefined. It will process and give me the result. So this would have given me this result. So if you see, if you have traded based on this particular strategy, then you would have made this many trades where you would had this many losses and this many profits. So trade by trade can be seen here. So all this technicality is with respect to how to do this particular or operate this particular trading platform, or how to know about it, how to know about this feature. Everything is mentioned on our FAQs page on 5paisa website, which you can refer to understand this particular platform functionality in much deeper sense. So this is one thing. So if you could see, I'll go here again. I'll reset this thing. So if I select the group as Nifty 50 again, and if I say user defined, and say if I would save this particular strategy first, and then come back and select the strategy here, then I could test this particular strategy as well, backtest this particular strategy as well, and I could actually get to know that if this strategy is actually performing or not, or how is the performance of this particular strategy. So this is particular tool where you can test, build your strategy over the charts, see how your strategy is performing, see the signals over it, and you can trade, make the trades with using the same. So I'll quickly go to another tool which is most helpful for a beginners. So this is called as option strategies. So as I said, everyone should be, so you are IITians, and I guess options is something which not everyone would easily understand. But those who understand this in a very deep sense make a very good amount of money, as well as they can build a very structured product for a trading, and always have a risk defined strategies in place, and they can automate the same as well. So that's, so say if you want, so I'm just quickly taking you through this. So if you want, you have selected the script as an FT, and you are selecting maturity as current month. say my margin is 10 lakh rupees and available margin is this. The max risk I'm willing to take is less than or equal to say 1 lakh rupees, which is 10% of it. And my type is conservative. I'm conservative type of, you can have the moderate or high risk strategy as well. And the trend I'm looking at Nifty is bullish. I think that Nifty will perform very well in few days. That's my perception, and that's the reason I'm taking this here. So this is not my view. I'm just giving you this as an example that if I take it as a bullish, bearish, neutral, or volatile, there are multiple things you can do. And if I search for it, I get this many results. So these are basically strategies, predefined strategies where you don't have to apply your brains that how to create the strategies around it when you have the conservative approach. And if you think that the trend is bullish, this particular tool will give you a predefined strategies with calculation of max loss which you can make and max gain you can make. So say this is the strike price. I want to trade into the out of money strike price, say 18,150, where I would have to invest about 9 lakh rupees. So that's where I'm trading 21 lots, but you can do it with one lot as well, right? So that's how you can make the changes onto it. Since I have taken my margin plus premium as 10 lakh rupees, it has given me the uh, basically I have taken it for my appetite. So this is a tool actually for the beginners. So those who understand the options, basic options, and does not understand the strategy, and they want to basically trade into the strategies to know it more and have the risk defined positions, then you must go with this particular kind of tool which will help you to create the strategy along with all the details. So let us view the details for this particular strategy. So it will buy one particular 18,150 put option of 31st March expiry where the premium is 942 rupees, and I'll buy 21 lots, which means the 525 quantities, since uh, that's how it is, and the value of that particular thing. So this gives me the payoff table and payoff graph as well. So if you see the max risk in this particular strategy is limited to 7,455 rupees. Max gain is also limited since it's a structured strategy, it's a bull put spread. So max gain you can get is 45,045 rupees, and your break even point is when market reaches 18,157 rupees. 157 points, sorry. If it reaches 18,157 points. So you can execute the same with taking the same one lot as well, and your max gain, max loss will reduce as at that particular ratio. So if you see whenever the market until the market is at 18,150 does not come at 18,150, you will bear the loss of this. So say on 31st March 2022, if market is at 18,100, then you will have the loss. But on the 31st March 2022, if the market is at 18,200, then you will have the profit of 45,045 rupees. And you can execute this particular strategy by clicking, by only making one click, execute, and it will execute both of the legs for you. So that's more of about this particular platform. And now I'll be taking you through one more platform, which is moreover for the beginners. So this is the Sensible platform which with whom we have tied up, where since many of you are the beginners for the derivatives and does not know much about it, here you can simply make the prediction with respect to where the market is going to be. So it is asking me to tell me my view of where Nifty will be this Thursday. So if I say it will be up, then it will ask me kitna up rahega. It will have the small move or average move or big move. So on that particular basis, it will give me the strategies which I can trade just by making one particular click. And that's very much easy since you are the beginners, and if you don't want to take trades with your real money, you can always do virtual trades, or you can say paper trading, which will not cost you anything, and you can actually get to know more about the markets. So the same can be done with all these three particular stocks, and then you have strategy wizard if you want to do it with respect to stocks. Really sorry about that. So it has multiple things with respect to options. You can have the option chain. You can see the option chain here as well, and you can see the Greeks and everything here as well. You can see your positions and everything here as well. So I'll just take you to multiple things. So this is basically a strategy wizard where you can, I say it, you will get the predefined strategy. This people have the strategy builder as well, where you can see the predefined strategies as well. For bullish, you have buy call or bull call spread or bull put spread. Then for others, you can have the iron fly, iron condor, long straddle, short straddle, long iron butterfly. And you can see, say, if I click on long straddle, you can see the payoff graph as well. You can see the theta, delta, gamma, vega, rho, everything here, the Greeks. So based on the time to expiry, this will give you the values. So I'll just take this expiry to 28th April. So you will get idea more about it. So this will have the max profit unlimited, while you have the max loss, a defined max loss, and then you have the probability of profit also. So hello, am I audible or my video is lagging?
Yes, sir, you are audible.
Okay, so your max profit is unlimited and your max loss can be here. So this particular tool, why I particularly like this tool is it gives you the probability of profit. If you execute this particular strategy, then what is the probability that you will make the profit or you will end up in profit? It is only 42% for this particular strategy. So you can basically modify this strategy to improve your probability of profit, and you can minimize your risk as well. So that's where you have to grow more into the derivatives, and that's how this payoff graph as well you can see here. uh, so if say it gives you the target date to expiry is 35 days to expiry currently. So as soon as your goes you are near to expiry, you will see the theta is increasing day by day on the negative side, but obviously. So that is called as time decay. So where your option premium is decaying since the expiring is coming nearby. So there are multiple strategies with respect to the delta, time decay, everything. So you have to get more into it to understand it. So on basic part of it, basic part of options and derivatives would be taken into next particular session, which will be conducted by Ruchit. But you can always explore these platforms to know more about it. So that's about the 5paisa platform. I am sorry I could not show you the 5paisa mobile application, which is also there. So that is again a very friendly application where you can have all this functionality and moreover a few more functionalities there, which you can use it for making the trading decision or trading. But I always use whenever I am on my laptop or desktop. I always use desktop or web trading application because it is more quick in nature for performing trades, and you have comprehensive view. You can see lot many things at one particular place. Like you can see one, two, three things at one particular place. while on mobile screen you have to see one single things on a one particular page. You cannot see multiple things at one particular time, right? So that's the reason. These are the charts where you can analyze. So web trading charts also have this particular functionality. I don't know if I can track this widget or not. Sorry. Okay, I'll just minimize this. Okay, so if you see the charts are opened in new tabs, so you can have the multiple tabs as well for checking the charts, multiple charts at same particular point in time, and you can keep on gazing around it, and you can, but obviously do the charting as well with the charting tools available here. So that's moreover about it. Let me know if you guys have any question with respect to the platform. Since you are beginners, I'm not much more diving into the trading products, specifically the products which are helpful with respect to the margin trading or margin funding or debit fundings or exposures, leverage. I'm not getting into it, but this is the basic platform which I wanted to explain. So that's all about it. Let me know if you guys have any question. Then Ruchit would be taking this session ahead. So I guess he is already present now. So we just expand that. Not being able to expand this. Okay, first I'll stop sharing my screen. Okay. Okay. Ruchit, you can take this further forward. Meanwhile, I'll just reply everyone who is asking onto the chat. Thank you, everyone.
Parth sir, if you could continue for some time with question and answers that are coming in the chat.
Do that. Sorry. Questions related to trading platform, trading functionality. So, so as I said, we have a tie-up with Sensible. We have tie-up with Streaks as well, which will help you in option trading. And we are coming up with more such tie-ups which will help you in option trading, particularly if you are trading in strategies or if you are a high frequency trader or intraday strategy trader, then we have open APIs as well where you can develop your own platform as well, or you can code your strategies on Python or any particular using any particular language and then execute the same via our open API. And again, we are integrated with multiple partners as well who can help you to execute or automate this particular trading, like TradeTron, AlgoG, AlgoMob. So, moreover, that particular part would be taken by Rishabh Jain. What is the first thing to try out investing in if I am a newbie to investment? So what we have done is basically, so for a newbie like you, so we have created this idea section. So I'll be again sharing my screen. So moreover, people are confused about where to invest, what to invest into. That's where this particular idea came into the picture, and that's the reason we have kept this section name as ideas. So first foremost thing, you would like to know about what people are purchasing at this particular time. So कितने लोग क्या देख रहे हैं, कौन सा stock में, who is interested in what particular stock. So if you see 44K people has viewed IEX stock. So that means the IEX stock would have some news or would be in limelight today because more people are showing interest in this particular stock. That's where you can start analyzing this particular stock fundamentally or technically, just looking at basics to, or you can just check the what are upcoming things with respect to Indian Energy Exchange, how they are planning expansion, how much they have their operating efficiency, what is their net margins or gross margins, how the company is basically performing. So you can gaze about. So if you are a basic investor, right? So say you are pretty much new to investment. So say if I come on this particular page, I am very much new to investment. I saw that IEX is trending today. Now I want to know more about it. That before investing, if this particular stock is worth investing or not. What I'll do is I'll do the basics. I'll see what the stock has given the return in past few uh, 10 years. So say 1 month it has given a return of 9.58%, which is quite good. Or 1 year it has given the return of about 90%, which is close to 100%. So if I would have invested 10,000 rupees a year back in this particular stock, then I would have today 19,051 rupees, right? So this is particular thing which you can look at. You can look at the market cap. So this particularly market cap can be defined as number of shares which are actually rolling into the markets. We call it as number of shares which are outstanding in market into the price of that particular stock. So that gives you the market cap of this particular company, and which is quite high, 20,561 CR. So that is quite high. And you can see the volumes. So again, the volume plays a very important role. If the stock does not have much volume, then it can be easily be fluctuated, or you will see the volatility is high because the volume is low. Somebody who is coming up with buying or selling of huge volume can easily manipulate that particular stock, and that's the reason you should stay away from such kind of stocks where you see the volume is not so high. So that's one thing. Then you should go to the technicals, where basic thing first you should see is SWOTs. SWOT is basic thing everyone should go into a particular stock and look at. The whole reason being is this basic thing everyone can understand very easily and can give you a very clear picture about how the company is performing. So it has already given you bifurcation that what is the strengths of this particular company. So if you can see, it is raising net cash flow and cash from operating activity, which is a good sign. Good quarterly growth, then you have the company with no debt. So company does not have any loans. That is a very good thing. Year on year, the profit margin, net profit margin are increasing. So growth in quarterly net profit margin with increasing profit margin year on year. Again, a good sign. So similarly, you have seen that book value per share has improved from last 2 years. These all are good signs to look at. Then you can see the weakness. What is the probably weakness which would stop you from investing in this company? So you can see the IMF decreased their shareholding. So you would be knowing that mutual fund companies invest into these stocks, right? Basically, they create a particular portfolio, and that uh, particular portfolio is managed by a fund manager, and that's how the mutual fund functions. So equity based mutual fund would might have the holdings into this particular companies, and you can see the mutual fund companies or the fund managers has reduced their holdings or decreased the mutual fund holdings for this particular stock, which might be a concerning factor. Similarly, you can see the opportunity and threats. What is the opportunities, upcoming opportunities for this particular company, and the threats. This is basically a few parameters or enough of the parameters to make a prima facie decision that do you want to invest in this particular stock or not. if yes, if you want to invest in a very huge quantity, or if you are putting up more money on this particular stock, then you should get much more into this kind of research where you look at their financial ratios, you understand those financial ratios, and then you put in your hard-earned money into this particular stocks. So the stock market should be taken as a strategic investment opportunity, not a betting opportunity. So always keep this particular thing in your mind. This is a strategic platform, or this is a strategic asset class which you should invest into by taking the decision based on fundamentals and technicals. So that's it. So I guess Ruchit is now ready to take the session ahead. So I'll be making a closure to this session and taking the question and answers from the messages. Hi Ruchit, you can take this further.
Thank you, Parth sir, for your valuable time to us. And welcome, Ruchit sir. Let me introduce about Ruchit sir to all the participants. He is a lead research analyst at 5paisa. He has a vast experience of 14 years in the field and is proficient in technical and derivative research. And for the last 7 years, Sir has been regularly appearing on various business channels such as CNBC, Z Business, and his views are covered regularly by various print and online media. So we are very proud and very happy to have such a personality between us. And sir, you may continue now. The stage is yours. No, sir, actually you are not audible right now. You are muted, I think. Is there any issue, sir? Sir, actually you are muted.
Yeah, am I audible now?
Yes, sir, you are audible now.
Yeah. Hi, very good evening, everyone. First of all, thank you for the introduction and thank you, for giving me this opportunity to present in front of you all. Well, without wasting any time, I would like to start with my presentation because the limited time that I have been given, I want to utilize it for maximum, for providing the maximum knowledge. So I'll start with the basics since you all are students. So I'll start some of the basics. Some of you may be having a good experience in the derivatives or may have started trading in the derivatives segment. Many of you may be new to this derivatives world or may not have much idea. So I'll start with the basics, and once basics is clear, the second half or after 15 or 20 minutes, once I go through the basics, I'll focus more on practical things, that how to do research on derivatives data, how we as an analyst do research on the derivatives data and recommend trading to our clients, or how should you practically trade, or what data you should research on, right? So starting with the basics of derivatives. So there are two segments in derivatives which are traded. One is futures and other one is options. So what are futures? Futures is nothing but if you this is the agreement between two parties. One is the buyer and one is the seller, right? So all the derivatives contract come from underlying. So suppose Nifty is there. So Nifty's derivative would be there, Nifty's futures and Nifty options. Reliance Industries underlying is the stock in the cash segment. Its derivatives would be Reliance futures and Reliance option, right? So futures pricing depends on the cash market pricing. Even the option pricing depend on the cash market prices, and futures basically are contracts which are standardized by the exchange. The NSE and the BSE exchange, they are standardized the contracts which can be traded by two different parties. So what happens in that? In the cash segment, you can buy as much as shares you want. Suppose for example, Reliance Industries, if you want to buy 5 shares, 10 shares, 15 shares, 100 shares, you are free to buy any quantity of shares. But what happens in futures contracts? They keep a particular quantity which is fixed. For example, they 250 shares becomes one lot. So in futures, when you trade, you have to trade in lots. 1 lot, 2 lot, 3 lot, 4 lot, 5 lot, like this. And quantity per lot is fixed. So if exchange has fixed 250 shares of Reliance in one lot, so you can either buy 250 shares, that is one lot, or 500 or 750 or 1000. So in multiples of 250. So this is how it is traded in futures. The prices of futures would depend on the cash market. If the cash market prices goes up, then the futures contract prices will also go up. If in the cash segment the prices go down, then in the future segment also prices will also go down. Now what is the benefit, main benefit over here? The thing is that in cash segment, you can only buy and trade. You can only buy and trade. Suppose you have a bearish view on any stock. You have a bearish view on HDFC Limited. I'm just taking one example. So what can you do in the cash market segment? You cannot do anything. If you short in the cash market, you sell it first, then you have to cover it in intraday only. You have to cover the position on the same day. In India, it is not allowed to short in the cash market segment and cover it on the next day or in the future, right? So in the cash segment, you have to cover it on the same day. You have to trade only intraday. But if you have a short-term view or a positional view that the market will go down or any stock will go down, then you can trade with a bearish position in the futures and option segment, right? You can trade with a bearish position in the future segment. In futures, you can go short and hold for some days. In options also you can take a bearish position and hold for some days, right? So this is how trading is done in the futures contract. Now futures price is not exactly same as the cash market price. Futures price by formula is cash market price plus cost of carry. What is cost of carry? Suppose there are 30 days for the contract to hold. For every contract there is one particular date which is called the expiry date, right? You have to square off that contract before that date itself. So if there are 30 days to expire that contract, then the cost to carry that, the interest cost, in commodities there is storage cost, the cost of to carry that for next 30 days is called cost of carry. So futures price is equal to spot price plus cost of carry. Now what happens as the expiry comes near, as the expiry date comes near, the futures price and the spot price difference becomes less. And on the expiry day, now when is expiry? Last Thursday of every month. F&O expiry is there on last Thursday of every month, right? So on the expiry day, the futures price close will be equal to cash market price. So whenever there is expiry, the futures price close is always equal to the cash market price. So irrespective whether price is high or low during the entire tenure of the contract, the expiry days closing of futures and the spot price will be the same. Okay, I hope you got it about the futures. Now let's come on to the options. Now last few months, especially last one and a half, 2 years after the pandemic which was there are a lot of accounts which have been opened with brokerage houses. A lot of new accounts have come, a lot of new traders, young traders like you, who have opened the account, and more of them are driving towards the futures on options or towards the derivatives. Why? The main reason for getting attracted towards F&O is that the investment is less. In lesser amount of investment, you can trade larger positions, and the profit or loss is much faster than what happens in the cash market segment. So in very short term, you can trade, you can earn a high amount of profit, but of course, the more the rewards, the higher is the risk. So those who can take high risk, high reward bets, they are trading more towards futures and options. So this was the futures. Now the main thing is options, where more analysis is done, where is more leverage positions can be taken in futures and options. So option, what by definition, option is a contract which gives right to buy the underlying at a date and a stated price. Now practically there are two type of options which are traded on the exchange: call option and put option. Remember, from a buyer's perspective, there will be two parties. If you are buying some call option or put option, there will be other party who is selling the option, right? There is always a buyer and a seller. So one is the buyer of an option and one is the seller of an option. From an option buyer's perspective, call means bullish and put means bearish. Okay. I'm speaking just from an option buyer's perspective. From option buyer's perspective, call means bullish. This means that if your view is bullish on any stock or on the Nifty or on the bank Nifty, then what you have to do? You have to go and buy call option. Because if Nifty's price goes up, then their call option prices will also go up. So if you have bought call option, Nifty goes up, the call option prices go up, you can make profit through that. Similarly, put option means bearish, right? So if Nifty's price goes down, I am taking example of Nifty. This is applicable to all the stocks as well. So if Nifty goes down, then Nifty's put option prices will go up. What would happen? Nifty's put option prices will go up. So if your view is bearish on the market, that till the expiry date market is going to go down or any stock is going to go down, then what you have to do? You have to look to buy put options. So what will happen if that stock goes down? Then the put option premiums, the prices will increase, right? So that you can earn profit from them. Now this is from a buyer's perspective. Now let's see from a seller's perspective, from the option seller's perspective. If call option buyer's view is bullish, so what should be the call option seller's view? One who is selling, what is his view? His view is not bullish. Buyer is bullish, seller is not bullish. He may be neutral or he may be bearish, but he is not bullish. Okay. Now the put option buyer's view is bearish, means the put option seller's view is not bearish. Okay. Put option seller's view is not bearish. So he may be neutral or he may be bullish, but he is not bearish. Now let's look at some exchange. I just shared some another window with you. Okay, let's continue with this. So I hope you have got this, the basics of call option and put option. Now this is the risk profile of option trader. If you are an option trader, you must understand the risk profile first. Now derivatives is a zero-sum game. What is a zero-sum game? Zero-sum game means there are two parties, one is buyer and one is seller, right? So if a buyer earns any profit in derivatives, where does that profit comes from? From the seller's loss. If a buyer has made any profit, means the seller has booked a loss over there. And if a seller has made any profit, means the buyer has booked a loss over there, right? So one party's profit is another party's loss. So that is why derivatives is called a zero-sum game. Now, of course, this is at a gross level. Then from that gross level profits and losses, brokerages are there, commissions are there, that are deducted, and the net level may be different. But I hope you have got that why derivatives is called a zero game, because one party's profit is equal to another party's loss and vice versa. Now the option buyer's profile, if you see, the option buyer has limited loss and unlimited profit. Whenever you buy an option, you always buy an option at a price, right? There is a price for every option. So there are different strike prices and there is a price for every option. So that price in the options terminology is called a premium. It's called a premium. So that premium which you are trading, for example, suppose if I buy Nifty, any call option worth premium of 5,000 rupees, worth premium of 5,000 rupees. So that 5,000 rupees premium which is there, that has to be paid by the option buyer. Option buyer always pays the premium and option seller always receives the premium in their account. I'll repeat, option buyer, there is a premium for every option. If you are buyer of an option, it's just like the insurance. What happens in insurance? The one who buys the insurance, they pay the premium, and the company who is selling the insurance, they receive the premium, right? So the option buyer always have to pay the premium similarly over here, and the option seller always receives the premium. Now the premium that option buyer has paid, that is the maximum loss of option buyer. That is the maximum loss of option buyer. So option buyer's loss is always limited, but there is no limit on his profit. There is no limit on his profit. He can incur unlimited profit. So what we have discussed, that derivatives is a zero sum game. One party's profit is another party's loss. So if option buyer's loss is limited, can I say that option seller's profit is limited? Right? If option buyer, because option buyer, whatever loss he make, that will be the profit of option seller. Option seller means option writer. So if option buyer's loss is limited, means option seller's profit will be limited. Correct? So option buyer has limited loss, option seller has limited profit. What is the maximum loss of option buyer? The premium which he has paid. This means that premium which option seller has received while trading, that is his maximum profit. Okay. Now option buyer's profit is unlimited. There is no potential of option buyer profit. Suppose you have bought a call option, right? If you go and buy a call option of Reliance Industries, and if Reliance share price goes up, the call option premiums will also go up, the prices will go up, right? There is no limit on the upside for the call option to go. So the profit potential is unlimited. But if Reliance stock price goes down, you have bought call option, right? So you have said that the prices should go up. But if the Reliance Industries prices will go down, then what will happen? The call option prices will also go down. The call options premium will also go down, correct? And the maximum if the premium could go is to zero. That 5,000 rupees premium which you have paid to buy that option, that if reduces, right? If the market or if the stock does not move in your favor till expiry, then it can go maximum to zero. It won't go below zero. Okay. Similarly, for option seller, if options buyer's profit is unlimited, then option seller's loss would be unlimited. Because if options buyers make a huge profit, where will that profit come from? That profit will come from option seller. Okay. So option buyer's loss is limited, option seller's profit is limited, option seller's profit is limited, and their loss potential is unlimited. I hope you got this risk profile. Now, this risk profile, you have to see that what risk profile do you like? Whether you like to take limited loss and unlimited profit, or limited profit and unlimited loss. Of course, most of us would choose being an option buyer only, but option writers have certain advantages in their favor which option buyers do not have, which we will discuss ahead, which option buyers do not have, and that is why people or traders are also liking to go and short options or go and sell options. Okay, but I hope this risk profile is clear. What is the risk profile of options trader? Now let's understand one concept called moneyness of option. Now, this is just a terminology. Suppose that Nifty spot price today is at 17,000. Today we are trading around 17,250 in Nifty, but I have just taken a round figure for example. So suppose Nifty spot price is at 17,000. So 17,000 option, 17,000 strike price option. So there are different strike prices. 17,000, 16,900, 16,800, 17,100, 17,200. Every 100 rupees difference, or in fact, every 50 rupees difference, you can find a different strike price options. 17,000 call option would be there. 17,000 put option would be there. If you think Nifty will go up from here, then you buy 17,000 call option. If you think Nifty would go down from here, then what you have to buy? 17,000 put option. Okay. Now, say if Nifty is trading at 17,000. Then 17,000 call option is called as at the money option, and similarly 17,000 strike price call put option is also called as at the money option. Okay, so what is the current market price of Nifty? The nearest strike price which is there, that options are known as at the money options. All strike price below the at the money means if Nifty is trading at 17,000, then 16,900, 16,800, 16,700, 16,500. All those call options would be called in the money options, and all those put options will be called out of the money options. Okay. And if Nifty is trading at 17,000, then all higher strike price options, 17,100, 17,200, 17,300, all those call options would be called out of the money options, and all those put options would be called in the money options. Okay. Now the premiums, if you see the out of the money premiums, all the out of money options, call options as well as put options, right? What we have discussed over here. Out of money options prices or premiums are usually less than in the money options, right? Because when you see the pricing of options, the premiums which are there, option pricing is a combination of their intrinsic value and time value. Now first, what is time value? Time value means how many days are left for expiry of value for that. Suppose there are every last Thursday is the expiry. So suppose there are 20 days left for expiry. So there will be 20 days time value in that. Suppose there are 10 days left for expiry. So 10 days of time value would be there in the option premium, right? So intrinsic value plus time value. These two other things. I hope you have got time value. Now out of the money options, those options which we discussed over here, 17,000 is the Nifty. So higher strike price call option and lower strike price put options, right? These are out of the money options. So all out of the money options only have time value in them. Out of the money options only have time value in them. At the money options which are there, at the money options, all at the money options also only have time value in them, right? Only in the money options which are there, in the money options have time value plus intrinsic value. In the money options have time value plus intrinsic value. Now, time value is number of days left for expiry, a value for that. Suppose there are 20 days left, then it will be 20 days time value. 1 day is gone, then 19 days will be left, then there will be 19 days time value. 15 days are left, so 15 days time value. 10 days are left, so 10 days time value. So as you come near expiry, the number of days to expiry will keep on reducing, right? The time to expiry will keep on reducing. So as the time to expiry keeps on reducing, the time value will also keep on reducing, correct? The time value will also keep on reducing. So when the time value reduces, the options value will also reduce, right? When time value reduces, the options value will also reduce. So who will benefit from that? Option sellers will benefit, correct? Option sellers will benefit. So today Nifty is at 17,000, right? All out of the money options have a premium of time value because there are 5 days left for expiry. So there is a 5 days time value in that. Now, if on expiry day, when the expiry day comes, Nifty is trading at same level at 17,000. So what would happen? The time value will reduce, right? So the time value will reduce, then that would come to 0. On expiry day, what happens? The time value becomes 0 on the expiry day. Okay. So if your option that you have bought, if that remains out of the money on the expiry day, if that remains out of the money on the expiry day, then what happens? The option value becomes 0. If the option is in the money, then the time value for in the money option will also become 0, but intrinsic value would be left in them. What is intrinsic value? Intrinsic value is equal to current market price minus the strike price. Simple formula is that current market price minus the strike price. So if current market price for Nifty is 17,000, 16,800 call option is in the money option, right? So if 16,800 is in the money option, then how much intrinsic value is there in that? 17,000 minus 16,800. So 200 rupees intrinsic value will be left in that. Okay. So this is how you calculate intrinsic value. Current market price minus the strike price. So 200 rupees which is there, that will be intrinsic value left. But all time value will become 0 on the expiry day, and all out of the money options value will become 0 on the expiry day. Okay. I hope this is clear. Can I get an option to change the screen? I hope you all can see this NSE screen in front of you. Yeah, so this is the NSE screen. Now, how to look at options? How to look at options? So when you go to the NSE screen, here you can see a live market option. This is the live market. When you click on live market, there is an option chain written there over here. Option chain. And you click on equity derivatives over here. Under option chain, there is a equity derivatives tab. So when you click on this equity derivatives tab, this is the option chain which will get open in front of you. Okay. So this is the option chain which I was referring to. Now if you look down over here, you can see option chain for Nifty. This is the option chain for Nifty. If you want to change it for Bank Nifty, you can select Bank Nifty over here so that you will be able to see Bank Nifty options prices. Okay. If you want to see any stock options details, then here is a select symbol sign. You click on this, you click on the any stock options. So here in front of you, I have here Adani Enterprise. So if I click on Adani Enterprise, then or when you scroll down, all Adani Enterprises options details will be there in front of you. Right? This is the expiry date. Can you see the expiry date over here? So this is 31st March, which is the last Thursday of the month. And you can see that April month's expiry is there on 20th April and May month's expiry is there on 26th May. Now, every month, last Thursday is the expiry date. Now, if I change this to Nifty, then you can see the expiry date here, 24th March, 31st March, 7th April, 13th April. So, index options have expiry every week. Index options have expiry every week. There are weekly contracts in index options. So there are two indexes which are traded, Nifty and Bank Nifty. So Nifty and Bank Nifty, there are weekly contracts, and all the stock options have monthly contracts which expire once in a month. Okay. So this is the 24th March. Today is 24th March. So today was the weekly expiry where contracts got expired. Now next expiry is on 31st March, which you can see, which is the last Thursday of the month, when on the stock options will also expire. Now, if you scroll down over here, there are different columns. You can see the middle one is the strike price. Middle one is the strike price. All options have different price contracts. So today's current market price for Nifty, you can see here is 17,222. So if I scroll down over here, I can see in the strike price column, see 17,200 price strike, 17,250 price strike, 17,300, 17,350, 17,400. There are different strike prices. Like every 50 rupees difference, you can find a strike price. So these are the contracts, these are the strike price contracts which you have, which you can trade. Now you have to select which contract you want to buy, which strike price contract you want to buy. We will see further that ahead that how to do this selection. Now this is the strike price. On the left hand side of the strike price, all these details are of the call options. All these are call options details. And on the right hand side of the strike price, all these are put options details. Okay, these are put option details. Now you can see over here LTP. LTP is the last traded price, which is the premium, which is the current market price or current market premium. Last traded price, which is the premium. There is a LTP in the call options as well. There is LTP of put options as well. So 17,200 call option, current premium or current market price is 218 rupees, right? 17,200 put option, current market price is 200 rupees. Now lot size of Nifty is 50 shares, right? As I told you in F&O, you have to trade in lots. 1 lot, 2 lot, 3 lot, 4 lot, 5 lot. So one lot of Nifty has 50 quantity in there. So if you buy, if you see the premium of 17,200 put, it is 200. So 200 multiplied by 50 means 10,000 rupees. So 10,000 rupees is the total premium of 17,200 put option, right? Now, who will pay this premium? The option buyer. So if you go and buy 17,200 put option at 200 rupees, then you have to give 10,000 rupees, which will be deducted from your account. And who is selling this option? They will receive this premium. They will receive this 10,000 rupees in their account. Okay. So different strike prices have different premiums. Now, if you look at this, 17,200 is the Nifty current market price. So 17,200 options, call option and put option will be called at the money options. We learned about at the money option, out of the money, in the money. So 17,200 is Nifty strike price, Nifty current market price. So 17,200 call is at the money option. All strike prices below 17,250 means 17,150, 17,100, 17,050, 17,000, 16,950, 16,900. All these call options are called in the money options, which you can see in dark gray, right? These are in the money options, gray colored, which these boxes, these are in the money options. And all these put options, which are white colored background, these are out of the money options. Okay, what are these? These are out of the money options. Now all strike prices above 17,200, that is 17,250, 17,300, 350, 400, 450, 500, all those call options which are in white background are out of the money options, and all those put options are in the money options. Means on both the sides, ones which you can see in gray color, these are both in the money options, and ones which you can see in white colored background, these are out of the money options. Okay. Now, if I look at these premiums, let's look at first call options premiums. 17,200 call option right now is 218 rupees. Let's go out of the money, right? The white colored white background ones. See, 17,250 premium is 190. 17,300 is 165. 17,350 is 140, 123, 103, 86 rupees. The more you go out of the money, the premiums are cheaper. Let's go in the money. 17,150 rupee premium is 248. 17,100 strike price premium is 279. 17,000 premium is 345. The more you go in the money, the premiums are expensive, right? Correct? Now let's see on the put side. These are the put options premium. 17,200 at the money, put option is 200 rupees. Let's go out of the money first, which are in white background. 17,000 150 is 182, then 162, 142, 127. The more you go out of the money, the premiums are cheaper. And the more you go in the money, over here also the premiums are expensive. So you can see on both the sides, call as well as put option, the out of the money premiums are cheaper and the in the money premiums are expensive. We discussed about the reasoning about this. Why? Because out of the money options only have time value in them, and in the money option has time value plus intrinsic value. So how to calculate intrinsic value? 17,200 is at the money, right? 17,100 is in the money, the gray colored one, call option. So how do you calculate intrinsic value of 17,100 call option? Simple, current market price minus the strike price. So if today 17,200 is the current market price, then 100 rupees is the intrinsic value in 17,100 call option. 17,000 call option is how much intrinsic value? 17,200 current market price minus 17,000. So 200 rupees is the intrinsic value in the in this call option. So the far you go in the money from the current market price, the intrinsic value will be more, correct? The far you go in the money from the current market price, even in put options, the intrinsic value will be more. That is why the in the money options are more expensive, out of the money options are more cheaper. Now what would happen? As the expiry comes closer, what would happen with these out of the money options? If they remain out of the money, then the premiums will decay. The premiums will decay. And what would happen on the expiry day? All out of the money options will expire at zero value, zero premium, because there is only time value in that, which is zero on the expiry day. So I'll show you now. I'll show you example. Today there was the expiry day, right? So we will see 24th March data, 24 March options data. Today is the expiry day. What is the Nifty closing today? 17,222. So look, what is the closing price? The premium of 17,200 call option, it's 22 rupees, because this is the intrinsic value. 17,222 minus 17,200. Intrinsic value is 22 rupees. Okay. Now look at out of the money options, one which are in white. All have expired at zero. All the premiums are zero. Look on the put side. On the put side as well, see the premiums. All out of the money options are expired zero, right? And all in the money options have only intrinsic value left in them, which is calculated as current market price minus the premium, right? Now, if out of the money options expire zero, then why do we purchase it? Because out of the money options relatively have lesser premium. Option buyer always have to pay the premium. Now, this out of the money today is not necessary. It will be out of the money on the expiry day. Today, Nifty is at 17,222. Now, when is the next expiry? 31st March, Thursday, the next Thursday. On 31st March, suppose Nifty goes to 17,500. Nifty goes to 17,500. Then what will become? which strike price will be at the money? 17,500 call and put, they will become at the money, right? And today 17,300, which is out of the money as per today price, it will become in the money if Nifty goes to 17,500. 17,400 call option, 450 call option. Today these all are out of the money according to current market price, right? But if on the expiry it goes to 17,500, then they will become in the money. Then the intrinsic value will become less, right? So this, I hope you are clear that option buyers, you should look for buying. Relatively, you can look for buying options where the premium is less, but you should not go very far out of the money. You should not go and trade very far out of the money, because the more you go far out of the money, the chances of that strike price becoming in the money or at the money is less. And if that does not become in the money till expiry, then what would happen? The premiums will become zero, and all those who have bought those options, their entire the premium which they have paid, that will be their loss. And whose profit will be? The option sellers, right? Now you understood that why although option seller have limited profit, but still they are interested in selling option, because time is always in favor of option seller, because time is always in favor of option sellers. Okay, now let's come on to the first column, which is OI. Now this is purely from a research perspective. If you are involving in options trading, then you should not do trade without any research in them. Don't take randomly buy or sell options. Okay, now option buyers require margins which are very less. This is another factor, which drives more towards option buyer, because if you are buying option, then the premium which you have paid, that is the margin also which is required. So suppose you buy this option for 10,000 rupees. So for one lot, you would require a margin of 10,000 in your account. Okay. But the one who is selling this option, they will require margins of futures, Nifty futures margin, which today I think is around somewhere around 1,70,000, 1,80,000. So although they will receive a premium of 10,000 rupees, but the margin required in their account will be around 1,70,000, 1,80,000 rupees. Why? Because option buyers maximum loss as they trade is 10,000 rupees. Right? So exchange collects only 10,000 rupees, or whatever is the premium value, exchange will collect that premium from them, that much margin from them. But there is no loss potential for option seller. There is no limit on option seller's loss. Correct? There is no limit on option seller's loss, and hence exchange always collects higher margin from option seller. So today you can see this option, which is trading at 100 rupees premium, 16,900 put option, 100 rupees premium. Means if you are bearish, if you think that market will go to 16,900 or below before expiry, then you should buy the 16,900 put option, because there you have to pay only 5,000 rupees premium. What would happen if market goes down? Today we are at 17,200. Nifty goes down to 16,900, then this put options premium value will increase. From 99, it will go to 120, 140, 150. As the market corrects, all the put options premium increases. So from 99, it goes to 199 or 150, 200, whatever it goes, you can make profits from that when you square off the positions. Okay. I hope all this concept is clear. That this concept is clear. Now let's come on to very important part, which is open interest. This is OI. OI is also called open interest. What is open interest? Open interest means how much open positions are there in the market. Suppose tomorrow we enter into a trade, 17,000 call option, your 17,200 call option. You think that market will go up from here, so you go and buy 17,200 call option. Okay, I don't think that market will go up above 17,200, or it will not stay above 17,200. Then I go and sell that 17,200 call option to you. So we both have entered into a trade, right? We both have entered into a trade. So that will be counted as open interest of 1. Remember, that will be counted as open interest of 1. We both have entered different, we both are two different parties. But since you have bought one option, I have sold that option to you. So that will be counted as open interest of 1. Okay. So likewise, what is the total open position? What is the total open interest that you can see in this OI figure? How many contracts are open? So 17,200 call option has 62,000 contracts open, buyers and sellers contracts. 17,300 has 51,800 contracts open. 17,500 call option has almost 84,000 contracts open. So this is the open interest. Now this is today's open interest. The open interest as on now. Now this is change in open interest. The second column which you can see, change in open interest, means what is the open interest change compared to yesterday? What is the open interest change compared to the previous day? Okay. Similarly, on the put side, the last column which is you can see, this is also OI, open interest. On the left side, this is the call options open interest, and on the right side, this is the put options open interest. This is the put options open interest, and this is put options change in open interest. So 17,200, you can see this 62,000 contracts is 17,200 call options open interest, and 69,000 contracts is the 17,200 put options open interest. Now, how to read this? In options, the strike price which has maximum open interest in call options. First, we are talking about the call options. In call options, the strike price which has highest open interest, the maximum open interest, is known as the resistance for the market. Means maximum traders are expecting that the market will not go above that level before expiry. Okay, I hope you understood. So let's see where is the maximum open interest. What we can see now, 17,500 call option has 84,000 contracts, right? So as of now, if you look at around current market price, the highest open interest in call option is a 17,500. Means maximum traders are not expecting Nifty above 17,500 before the expiry. This is the resistance level. Similarly, on the put side, the strike price which has highest open interest is the support level. For the market. So where is the highest open interest which we can see? Over here, 17,000 put option, which is 75,666 contracts open. Correct? So this is the support level for the market. So as per the options data, how to look at support and resistance? Look at the highest open interest, in which strike price there is highest open interest. So 17,000 put option has highest open interest. So put options highest open interest is the support level. Call options highest open interest is the resistance level. So 17,500 is the resistance, 17,000 is the support as per this options data. Now, you found out support and resistance. You have to keep analyzing whether this open interest is increasing or decreasing. Traders keep on trading every second, right? Someone buys, someone sells. So the open interest also keeps on changing. If more and more contracts are getting open, so the open interest will increase. If existing contracts are getting squared off, then what would happen? The open interest will decrease. Okay. Now, see this. 83,000 contracts in 17,500 call option. 62,000 contracts open interest is in 17,200 call option. 51,800 total open interest is in 17,300 call option, right? So if this 83,000 which is there, if this keeps on increasing, today is 84,000, if it becomes 85,000, 88,000, 90,000, 95,000, 1 lakh, 1,20,000, 1,40,000, if this open interest in one particular strike price call option keeps on increasing, means that resistance is becoming more and more strong. What would that mean? That would mean that resistance is becoming more and more strong. So the stronger the resistance, market will not go above that, right? It will be more difficult for the market to breach that level, right? So if you want to buy call option, you think that the market will go up, and you can see that resistance is at 17,500, where open interest is increasing. The resistance is becoming more and more strong. So what should you do? You should go and buy either 17,300 or 17,400 call option, and not buy 17,500 and beyond call option, although the premiums are cheap. Okay. And if the open interest starts reducing over there, today it's 84,000. If it starts reducing to 82,000, 80,000, 78,000, 75,000, 70,000, 60,000, that means that resistance is becoming weak. What is happening? That resistance is becoming weak. If resistance becomes weak, then market will cross that level very easily. Okay. If resistance becomes weak, then market can cross that level very easily, right? So if highest open interest in call options is the resistance level, If that open interest keeps on increasing, means that resistance is becoming more and more strong. It is very difficult for market to go above that. But if that open interest in call option starts reducing, then what would happen? That means that what is happening? The resistance is becoming weak, and this is more bullish data, so market can cross that. On the put side, the highest open interest is at 17,000 put. So 17,000 is the support level as of now. What happens if this 75,000 figure there, it starts increasing 80,000, 85,000, 90,000, 95,000. If it starts increasing 1 lakh, 1,10,000, means that support is becoming more and more strong. What does that mean? That support is becoming more and more strong. The stronger the support, the chances of market going down is less, because support is very strong. Whenever market will come near that 17,000 mark, it will see some buying interest, and again prices will go up. So if the support is strong, market comes near that support, look for buying opportunities, look for buying call options. Okay, but if this open interest starts reducing, from 75,000, it goes to 72,000, 70,000, 69,000, 65,000, 60,000, then what does that mean? That will mean that this support which is there, it is becoming weak. OI reducing means support is becoming weak, and if support becomes weak, then market will break that level very easily. Okay, I hope you all are getting what I have told so far, right? Open interest in call options, highest open interest, resistance level. Put options, highest open interest, support level. Call options, open interest is increasing, resistance is becoming more and more strong, right? So upside becomes limited for market. Call option open interest starts reducing, then resistance is becoming weak. This is bullish for the market. Put options, highest open interest, support level. If the open interest keeps on increasing, see, if you are an option trader, you have to continuously track this data, right? If this open interest keeps on increasing, then what happens? The support becomes more and more strong. So this is good for the market. Whenever there is correction near that support, take that as a buying opportunity. But if that open interest start declining, means that support is becoming weak, and if support becomes weak, then market is ready to give a breakdown below that level, right? I hope this is clear. Okay, now the option prices which are there, I hope the open interest funda is clear. Now the option prices which are there, yeah, so we are back to this PPT. Open interest I have explained. Now this is the options open interest which we serve. Every futures contract also have open interest, correct? Derivatives contract, there will be one buyer, there will be one seller of the futures contract. Someone has bought, someone has sold. So that will be one open interest, right? So every futures contract also have open interest. The way to analyze futures contract, is different. How to analyze that? This is how you analyze open interest in futures contract. If the price is increasing and the open interest is also increasing, in futures, open interest is always analyzed with the price movement. Price goes up or price goes down, open interest goes up or open interest goes down, right? When will open interest go up? When new positions are getting built. When will open interest go down? When existing positions are getting squared off, correct? So if price is going up and open interest is also going up, the first line which I have mentioned, that means there is a long positions are being formed in that. That is called long formation. What is long formation? Price going up, open interest going up. This is the long formation. So this is bullish for that stock or market, whatever instrument that you are analyzing. If open interest is going up, the second line now we are talking. If open interest is going up, but price is going down, right? The new positions are getting built at. OI is going up, but prices are going down, then that is called short formations. What happens in short formations? Means that is a bearish, and market is likely to, or that stock is likely to go down from there if there are short formations, right? So long formation and short formation. In both cases, the open interest increases in the future segment. But if open interest is increasing and prices are going up, then long formation. If open interest is increasing and prices are going down, then short formations. Now, if the third one which we can see, if there is fall in open interest is reduced and prices are also going down, that is called long unwinding. Means long positions are getting squared off those who have formed long positions earlier, they are squaring off their positions. And if open interest is going down, but prices are going up, price is going up and OI is going down, that means that is called short covering. Short covering means those who have formed short positions, they are squaring off their positions because they do not expect further fall in their stock or in their market, right? So this is how you do futures open. Now, whenever you want to build a position or you want to trade in F&O, the best thing is to do combination of OI analysis of futures and options. Combination of open interest analysis of futures and options. Suppose in any stock, you see long formations happening in futures, means the price is going up, open interest is also going up, so there is long formation. And in options data, you see that call options are witnessing unwinding of positions, means call options are open interest is reducing. So there is long formation in futures, call option open interest reducing means resistance is becoming weak. So that is a very positive structure. That stock is likely to give very fast up move. You can go and buy call options of that stock. Okay, I hope you understood. Now, if there is a short formation in any stock, if there is a short formation, means price is going down in the futures, but open interest is increasing. If there is a short formation, and if you look at the options data of that stock, you can see the put options open interest is reducing. So if put options open is reducing, that means the support is becoming weak, right? So there is a short formation in the futures, and in the option segment support is becoming weak. So that combination is the best one to buy put options, because support is becoming weak. People are going shorting in the stock in the future segment. So there could be a very sharp fall in such stock in very short term. So for short term analysis, these two scenarios work out very well. Rise long formations, unwinding in call options. So go and buy call option, trade with a positive bias. Short formations and unwinding in put options, trade with a negative bias. Okay. And one more thing, while selecting strike price, now we have come to know that far out of the money options you should not select, right? Because out of the money options on the expiry date will ultimately become zero, correct? So you have to see support and resistance, and you should trade options within that range only. But you should also look at how many days are left for expiry. How many days are left for expiry? So today, now from today, if you look at next Thursday is the expiry day. So how many days are left? Friday, tomorrow's market, Monday, Tuesday, Wednesday, Thursday. 5 trading sessions are there, right? So we have 5 days time value in there, right? So you can trade a bit out of the money options. But as you come closer to the expiry day, there will be 4 days left for expiry, then 3 days, then 2 days, then 1 day, and on the expiry day, right? As you come closer to the expiry, come closer to add the money options. If there is only less time left for expiry, then do not go and buy out of the money options. If the time is less for expiry, then trade near at the money option. Nifty is trading at 17,200. Only 1 or 2 days are left for expiry. Your view is bullish. Go and buy 17,250 call option. Don't go and buy 17,400 or 500 call option, right? And if you trade on the expiry day, if you are an option buyer, and if you are trading on the expiry day, on Thursday, on the expiry day, then buy only at the money option. Your view is bullish, buy at the money call option. If your view is bearish for intraday, then buy at the money put option. Don't buy out of the money options on expiry day, because ultimately if they remain out of the money, then that will become zero, right? So buy only at the money on the expiry day. In the money options, there is no need to buy much in the money options, because they are a bit expensive. The intrinsic value also is added to that, so they are a bit expensive. Look to buy at the money option or slightly out of the money option, which works best. Okay, I hope this is clear. Now, one more concept I would like to explain is implied volatility. What is implied volatility? We all know volatility. Market ups and downs is called volatility. If there is huge ups and downs, then the volatility is high. If the market is trading in a narrow range, right, then the volatility is low, right? Now, IV, implied volatility, is very important, because IV impacts options premium. IV impacts options premiums. The premiums which are there, the price at which we buy and sell, the IVs impact those premiums. One is time value, which we spoke about, right? The time value impacts options premiums. Second is underlying value. Means in the cash market, if the price goes up, then call option premium go up, put option premium goes down, and vice versa. And IV is another factor which is very important, which impacts options premium. Now, where to see IV? I would again share that screen with you. Yeah, I hope you all can see this option screen again. Okay. In this option screen, option chain, you can see there is one IV column over here. There is one IV's column. This is call options IV. Right. Similarly, on the right hand side, you can see IV's column over here also. This is put options IV. Right. How to see IVs? Look at the money options. Only at the money. Don't look at out of the money option. So today Nifty is at 17,200. So what is 17,200 call option IV? Almost 20. What is 17,200 put option IV? Almost 24. So you have to do average of both. You have to do average of both. So average of 20 and 24 becomes 22. So 22 is the current IV of at the money options premium. If these IVs go up from 22, they become 23, 24, 25, 27, 28, 30, 35. If the IVs go up, then premiums will become more and more expensive. The premiums will become more and more expensive. And if the IVs go down, now they are at 22, so if it goes down to 20, 19, 18, 17, 15. So if IVs goes down, then options premiums will become cheaper. So what to see over here? Whether IVs are rising or whether IVs are falling. If IVs are increasing, then option premiums will become expensive. Then in that phase, option buying is more suitable. Option buyers earn more money when IVs are increasing. Of course, the direction should be right. If you are bullish, then buy call option. If you are bearish, buy put option. Right? If the direction is wrong, then you cannot make profits in stock market. Right? But if your direction is right and the IVs are increasing phase, rising IVs phase, then prefer buying option. But if IVs are in a declining phase, suppose IVs went till 30, right? From there they started coming down. From 30, IVs came down to 28, 27, 25, 24, 22, 20, 18. So when IVs are declining, the option premiums shrink. So in that phase, options buyers do not earn much money, but option sellers are more profitable in that case. So if you look at, you just have to look at the trend. If IVs are rising, if the trend is up, IVs are rising, then what happens? Then the option buying should be done. But in a phase where IVs are declining, you should avoid buying options, right? Because if IVs go down, the options premium shrink very fast. When do option IVs rise? Options IV usually rise during the events, such as election results are going to come. Certainly we saw some war type situations which were formed. So whenever you see such kind, then during such time, generally options IVs rise. Apart from events, the options IVs do not rise much. Okay. So this was about implied volatility. Keep on tracking this data. And I've covered most of the part that I wanted to cover within this time limit which was given. There are certain things before I end this webinar. When trading options, if prediction goes wrong, option buyer usually lose money very fast. You know why? Because time is always in favor of option sellers, right? So if you do not have, if your view is not going right, so don't wait in hopes that yes, market will go up. Don't wait in hopes. Whenever you think that you have proved wrong, just square off your position. Okay. High theta decay is always good for option writers. Theta decay means time decay. The lesser the time for expiry, it will be good for option writers. So time is always in favor of option sellers. Remember that thing. That is why even though profit is limited for option sellers, that premium is the maximum profit, right? Then also people go and sell options. Especially the institutional guys, the HNIs guys, they prefer more option sellers because time is always in their favor. When volatility is higher, premiums are expensive. And keep analyzing open interest positions. Open interest position is very important. Keep analyzing those open interest position, and that is why with open interest you can come to you can figure out that where is the support, where is the resistance. where the support is changing, resistance is changing. Today 17,500 call option has high open interest. Tomorrow if it shifts on to 17,300 call option, means the resistance has changed now from 17,500 to 17,300. Put options, today 17,000 put option has highest open interest, so that is the support. If the highest open interest now changes to 16,800, means support has changed from 17,000 to 16,800. So keep analyzing such open interest positions. That will help you a lot in selecting the strike price and everything. Okay. Hope the presentation was you have learned something from these presentations. If there are any Q&As, any questions, you can just see so if there are some questions. We'll take up those questions. Please post any questions if you have regarding F&O, regarding futures or options. You can also post your feedback in case if there is any part which I have not explained well. Is there a cheat sheet for F&O? There is no such consolidated cheat sheet that I have, but it's just the practical experience which I usually do research on, and I've shared that with you. But yes, these things you won't find in any books or anything. But I hope you keep analyzing the data. The more data you analyze, the more beneficial it will be for you. What happens if I buy at the minute 17,000 put option, but I'm not able to square it off on the expiry day with Nifty closes at 17,100, right? So all the out of the money options become zero. But since this will be in the money option, so in the money option, whatever intrinsic value would be there, you have to close your position at that intrinsic value, right? And now what has happened that SEBI has exchanged and SEBI has also come out with the rule of physical delivery of options, where if your options expire in the money, right? For example, if any stock options expire in the money, then you have to take or give delivery of that shares. So if your stock option in the money, then if you are an option buyer, right, then you have to take the delivery of that shares. If you are an option seller, then you have to give the delivery of that shares. Okay, so this is what happens with in the money options. So preferably, if you are in the money option, then it should be always preferred to square off your position before the market closes on the expiry date. And if your option is expiring out of the money, then as it is, that will become zero. If you are option buyer, then the entire premium will be a loss. Change in circuit also affects support. So generally, F&O stocks do not have circuit limit. It's only those stocks which do not trade in F&O, they only have circuit limit of 5%, 10%, 20%. F&O stock do not have any circuit limit. If any stock which is there in F&O, there is no limit of which they can rise or fall on any particular day. How can I find cheap lots for beginner level? So look at this option chain. Keep analyzing this option chain. In option chain, you will see where is the resistance, where is the support, and what are the different premiums. Right? So out of the money options will have lesser premium, cheaper premium, but don't always go for very cheaper premium, because the more cheaper premium you buy, the chances of that becoming earning more profits from that will be less. How can you figure lots at beginner level? So lot size is fixed by the exchange. One lot has X quantity of units or shares. The lot size is fixed. So you can start with one lot. If you are buying at a beginner level, trade only with one lot. Once you gain experience, when you see all kind of market, the falling market, rising market, sideways market, well, until you see all these three type of market, do not assume that you have become an expert, right? So what has happened in last one and a half year, what we have seen after pandemic lows, market have risen only one side. It's just last 4 months we have seen the price correction. So many people have become overconfident that the market, they have seen only profits because market have risen one side. But take it as a beginner, start with one lots, or you can also start with paper trading if you are not doing practical trading, right? And only when you see bull market as well as bear market as well as sideways market, then you can assume that yes, you have gained enough experience. Any more questions related to F&O? Okay, since there are no more questions, I'll end my webinar over here. Thank you very much for listening, and I hope this was clear. Just for beginners, I would just tell that one thing: research is more important than trading at the start of your life. Right? Give more importance to research rather than getting lucrated to earn that money. Right? Earning money will opportunities are always there in the market. Market is always open from Monday to Friday. If you have missed one opportunity today, you would say, oh, I would have earned 5,000, 10,000 profit, 1 lakh profit in this. That opportunity is gone. Opportunities are always there. But learning should be the main motto at the start of the stage. Learning from practical experiences. Once you are through with the theoretical knowledge which I have showed you, keep analyzing open interest positions, keep analyzing the data, look at the FIS data, what FIS are doing in their what FIs are doing in the future segment, what they are doing in the options segment. All those data is available on the NSE website. So keep analyzing data. First 3 months, I would tell you, first 3 months, your focus should be only on analyzing data. Read research reports of various broking houses on F&O. Keep analyzing data on your own. And once you analyze data, right? Once you think that you have gained a good experience or good practical or good sight on that data, then start trading by one lots. And as you increase your profits, you can increase your lot sizes as well. But remember one thing: money management is one of the most important part, right? So do not forget to do proper money management on whether you do it on the basis of technical analysis or on the basis of derivatives research. There are lots of stuffs available for F&O online as well. So online, if you want to study more about futures and options, if you can just Google it out through Investopedia. Investopedia has one of the best things which I have read online. So through Investopedia, you can always figure out or learn all the concepts of F&O. For books, John C. Hull, Futures and Options by John C. Hull can be started with. This you can consider as a Bible of Futures and Options by John C. Hull. So I think that is the one good thing to brush up your basics. Once your basics are clear, the fundas are clear of all the terminologies, then practical experience can be gained through looking at the data. Okay. Thank you very much, everyone, once again. Hope to see you again in whenever if we conduct the webinars again. I can share with you more things on F&O on futures and options, and have a very good career ahead of you. Thank you and all the best.
A very thank you to Ruchit sir with us. So I welcome him, and let me give a brief introduction about him. Rishabh sir has got extensive trading experience with ability to build advanced trading systems and facilitate algorithm trading by systematic strategies development and execution. And again, we are very blessed to have him here. So Rishabh sir, the stage is yours now. Thank you.
Hey, hi guys. Thank you, Sanskar and team. And thank you, Ruchit. It was a really nice, informative session about derivative trading. And before Parth and Ashwini sir also had a good session where they explained a lot of concepts about trading, basics of trading. So I want to so obviously now we are going to cover the algo trading and the automation of trading part. I just want to ask everyone that are there any question or something that you are having any doubts that you want to of trading that you want to get answer to, like we have Ruchit for some time, so we can ask him about any specific question that you want to ask, and then we will proceed. So any Q&A we can do small. In the chat also you can ask, and if Sanskar, if anyone wants to speak, let them speak. Let's understand their voice also, like what they want to say. Maybe they can't express on the chat, right?
Fine, sir. We can do that. If anyone has any doubt, He or she can just raise the hands and I can make the panelist for a while.
Ruchit, sir, so we have a question about how can you please tell us about the reality of binary trading? Is binary trading trustable? So, so for some reason we don't have binary trading. For some good reason we don't have binary trading in our exchanges, and so maybe Ruchit, you can tell more about this to people who have this question.
So we don't have binary trading at our exchanges, and frankly speaking, our exchanges or SEBI have taken enough care so that the investors or the traders which are there in the F&O segment, they do not occur large losses. So I think focus should be more on the trading that happens in our exchange. I think that through that only you can earn more money, or even that could be used by for hedging of your portfolios and positions.
Great. So I think briefly, if anyone wants to raise hand, we can have them say something. Then we'll start with uh, any books you want to recommend for technical analysis and fundamental analysis, basic books.
So Rishabh, I have recommended a book by John C. Hull.
Okay.
Someone has put in the chat also. Yes, Futures
Yes,
and Options
Jansi
by
here.
John C. Hull. Yeah, this is a good book to start with, where I think most of the derivatives basics would be covered in this book.
Makes sense. Okay. So thanks, Ruchit. I think I'll start with I just wanted to hear out some questions. I wanted to see if people are active because trading has now picked up a lot of eyes after crypto has come, right? So uh, that's where a lot of questions were about how we can automate our trades and how can we do some business, right? We can build something where money makes money for us when we are not available, right? So a big, this is a big question, and algo trading, API trading can be a big and can be answer to it, right? So let me share my screen. So I've got a small PPT to share, and after that we will have a webinar. Sorry, I'll have a code that I'll run through. So how many people know Python in the audience? Like Python, I think it's a pretty simple language. If anyone has, so you can do a thumbs up. So I know that there is audience for Python. Right. So what we'll learn in this session is going to be how you can automate your strategy trading. So you've seen a lot of things about strategy by Ruchit. Now we'll be talking about how we can actually convert that into a trade and how we can actually get started with it. So let me share my screen now. Uh, so is my screen visible?
Yes, sir, it is visible.
Perfect. So let me start with the basics. So how many of you are familiar with what are APIs? What are APIs? So APIs full form is application programming unit. Okay, it's an interface. So how many people are familiar with the term API? Because I'm not sure how many people are from computer background who have been working on some startup, some project into API. So API is a very generic term, okay, uh, which is used throughout the industry, not only in the fintech industry, but it is also consumed, and a lot of companies, everything is built over APIs currently. So APIs, I'll just give so for people who don't know it, you can imagine it as a messenger in between a client facing application to a backend, right? So most of the websites and platforms will have a front end and have a backend to it. Now, the way you get the backend database, right? Database information to the front end is via a messenger. And in our case, it becomes an API. So you can relate it like a postman who is sending messages to and fro from a source to a destination. Okay. So what are trading APIs? So let me proceed with uh, What are trading APIs? Trading APIs are a way where your front end can interact with broker's trading system. Okay, so a broker is a facilitator who facilitates. So broker becomes an API in between a client, that means you as students or as traders, and the exchange. Okay. So ultimately the process, like, so all the sessions in the start, they were all to explain you that how orders are important and how APIs are used to send your orders from your application to the exchange so that you can take trades and execute your strategies on the platform, right? So what trading API allow you to do is to place real-time orders, manage your positions, get live feeds, and automate your strategy. So all these things are completely possible by trading APIs. So if you see this flow chart, I think it explains pretty simply. So there is a system A. Let me if I can expand this. Yeah. So there is a system A that sends a request to system B. So you can consider this is your laptop or your mobile phone, anything, any front end. This is the broker, and this broker is going to communicate to the exchange that this user wants to place an order. Okay, and in return, exchange will say that yes, you have placed the order, true, and again it will return something true. So that you get to know that your order is placed to the exchange, and this is the broker, and the way we communicate between any of the point is by APIs. Okay. Now, next, let's understand. So, what all the sessions that we had in the first three segments, it was mostly about discretionary trading, where you see charts and where you manually take trades based on some criteria. Okay, but now we are going to jump ahead, and we want to, so because we are little lazy, right? We might have some lecture and the market is on, but I also don't want to miss a trade. So why can't a computer, why can't a bot do the trading for me? That is a concept, and that's where we use APIs to send your orders from our system to the to the broker's terminal. And what orders, this will be described over here. So uh, all the points, right? So the negative points of discretionary trading is that you have to be emotional and it is inconsistent. So if you have a good day, maybe you'll find you want to take a trade. So it's a lot of it's not a very rigid thing, right? It's something that flows with emotions. But this is completely rule based, that I want to buy if the price is here, else I don't want to buy, and I can code it and it will do that thing for me if the condition comes. Then it's consistent because it's rule based, it becomes consistent. And discretionary is like, okay, if I'm lucky I get that move, otherwise if I'm in a lecture, I'm busy, then I don't get it, right? So it's like there are mostly all the benefits of switching from a discretionary or a manual trading setup to a systematic and algo trading setup. Now, who are using algo trading? So all the major hedge funds, JP Morgan, the trading companies, Morgan Stanley, a lot of companies might have come to your campus. So even they are using trading API. So just if you want to do it as a learning experience also, you can go for it and pursue some basic courses on how you can get started into trading APIs. And so there I'll show how 5paisa APIs are so simple to work with, right? In that. Then a lot of startups currently, I'll take you through all the list of startups that are integrated with 5paisa, and that will give you a fair more insight about what we are talking about. So these are few partners, Symphony, TradeTron, Algobaba, Go Charting, Algobills. I'll show you what they do, right, at some time. So these are few partners that we have. They are all, and now so the you might be doing some development, right? So in your school time you might have done something in C++ or Java. So we have also built some SDKs around our APIs so that you don't have to uh, start from the root, right? You don't have to start from building, just hitting an API. We have built wrappers that I have a demo for it. I'll show you when we proceed after the PPT. And we have 6 languages, just 3 of them are covered over here. Apart from Python, Node.js, and Golang, we have C++, sorry, .NET, C Sharp, that is C Sharp, Java, and PHP also written for our APIs. Then few highlights, our APIs are free. Okay, most of the brokers other than 5paisa are charging for the APIs as well, and which makes it better for using 5paisa API. Then it is secured, easily integratable. I'll show you how it's easy. Then SDKs are there, and we have a good speed and performance. Also, we have a good rate limiting capacity when it comes to our API performance. So we have tested and tried and tested a lot of things that works out pretty well. We have a good feedback about it. But again, I'm open to feedback. If anyone has used 5paisa APIs for some reason in past, you can tell like how was your experience and all about it anytime in this meeting also. Then few more features are you can place orders, modify. So this is the main thing, right? When you want to automate a setup, you might have some triggers when you want to take a trade, and you can place order API. You can hit this API, use our SDK, and place your order to the exchange. Again, coming to the same logic how what I explained in the previous slide. You can get your symbols, then OH, the data, a chart also you can create from the APIs. Then monitor your holding position and margin. Everything you can do from the APIs. Okay, so uh, that is the feature about it. Now, I think a lot of content has gone through, and let's see some execution now. How the APIs actually work and how there is a wrapper. But before that, I will just show you just a second. I want to change the slide. So can you see this screen also? Uh, Sanskar, can you see this?
Yes, sir. Yes, sir. The screen is
Okay.
visible.
So this is our homepage. You can learn more about this. I'll just put this in the chat if it's accessible over here. Mm. Just go through this website. You'll get more to know about it. So all the things that I explained are put over here in a better format. Okay. Then I'll not go through it again because again it will be repetition of content. You can go through this website to get more detailed understanding. Then we have a marketplace that I told you, right? We'll talk about partners, how they are integrated. So we have a marketplace. Uh, this is the link for the marketplace. So you might have heard about few of these startups like Sensible, small case. I think Sensible was something that even Parth in the earlier session was showing to you. So you can see we have partnered with, again, this is about the APIs and the subscriptions. And this is the list of all our partners. Uh, this is the list of all our partners. So about more than 15 partners have so far integrated, and more are coming in. Okay. So all these partners are going to help you in quickly migrating your discretionary setup to a trading setup, to automated trading setup. So these will be the trading partners that you will be closely associated with if you want to do your algo trading. Okay. Now coming to our API documentation. Again, I'll just take you just show it the from the top only. So you can see we have whole bunch of APIs in this documentation. Orders itself have some about 7 to 8 APIs, and always we are adding more and more of APIs over here. So you can have market snapshot. Here we have demo code for Python, Node.js, and curl also. So if you want to just replicate this, just copy this and paste it in your terminal, and you can get started running with it. So all these things are there. Like it's a good documentation that I think you should again go through. So I'll just share this link also in the chat. Just you can go through it. Now, so till now you have any question? After this I'll go through this Python code. Any questions till now? You can give me a thumbs up or thumbs down if you understood or not understood about it. Am I going a little fast? Perfect. So So this is our Python. So GitHub, you might all be familiar with, right? Keep giving me thumbs up if you know about it, you want me to explain about it. So I think GitHub is pretty popular amongst developers. Now this is our Python SDK. Okay, here we are having all these features, and this is a sample code. Okay, once you have, so the requirement for get accessing this is that you should have a 5paisa account, and if you once you have it, you will get these API credentials inside your trade station. Again, the platform that Parth was showing you in the previous session. You can go there, get API, click on get API keys, and you will be ready with your API keys, and you can put it and plug in. It's like just copy this, put it in your code, and you're ready to go. So this is the same thing that I did. Okay, so uh, then we have all these APIs covered in Python programmable code syntax over here. You can just copy any section and paste it in your Python program that you are building for your strategy. So I think that you already are smart and you might not require the help of trading these partners, and you want to build your own strategy, or maybe you want to give this as a service to other people. I think you should focus on Python development or Node.js or any other Java as per your requirement. So I would not suggest students to go through partnerships. Rather, you should actually learn about how we can build some bots or some platform trading on Python. So for that, I'm going to do a demonstration. So let's say if you want to see a price uh, for Reliance, then I'll just click on. So first I have installed it, right? I have installed the library, and after this, I'm just going to execute this piece of code again. And so we get some data. So this is JSON. This is data type is JSON, and all the data about Reliance. So I had put in the payload that NSE is the exchange. The exchange this type is cash or C, and the symbol. If I put that, then it returns me that whatever. So if you see today what Reliance price is, can anyone put in the chat what is the Reliance price on NSE now? So we can verify that this API is working. If you want to see that, you can simply search on Google, right? Reliance share price. You can see that. You can see the price over here. All right. So all these things, yeah, right. So we have all this information again in our payload. Okay. Over here, you can see the change percentage. You can see about Reliance. You can check the price, all the prices over here. Okay. And the time token, everything, your volume that is traded today. This is a simple small example for one API. Now let's see more things. Let's say if you want to see what is the market status now. So you can run this, you will get to know that, okay, this segment is closed. This is again closed. And this currency, NSE currency segment. So we have this option also, and this is open. And the MCX market is also open, commodity market. Okay, so these information also you can get. You want to see the margin and the position, you can execute this. So now I know that this is the position I have. I have some shares in IITC. Okay, how much shares I have? I have some one share in ITC. This stock Anupam, I have some again. I have -2. That means I have sold some shares in Anupam. Okay, so all these things we get to know about in these APIs. They're easily from our APIs. Now, if I want to see what I hold, so I hold Anupam Finserv stock. I have two stocks in that, two quantity of shares in that. Jet Airways I have. So uh, simply, if you build your own thing, right, you can do the same thing. All that information that you are able to see in the trade station platform, website, or mobile app, you will be easily able to access that through the API. Okay. Then you can see the information about trade book. So this is what I had traded today. I had bought some stock. This was the script I bought, and the trade type is on, and what is the quantity, what is the time I bought, then the trade ID, exchange order ID. You remember that there are two APIs. One API sends the order to the broker, and the other API sends the broker's order to the exchange. So this is the ID for from the exchange to the broker, right? So we have all this information in this API. Then you can see the order book also over here, where we can see how what all the orders are placed. Then we can also check for real-time market data. Okay, so let's say if you want to see, this is the real-time market data. So now this market exchange is closed, so we will not be able to get the response. But if you see what I have got, let me just open this in a JSON editor. So all this data, so this, you should be very familiar with all these things, right? When you are building your platform. So that's why I'm covering all these things. So you can see you have the price, quantity. This is all the data coming from directly from the exchange and freely available so that you can build some arbitrage system, some algo trading bot. All these data we are providing. Okay. Then now you might have also read about what is option chain. So how many people have heard about option chain from Ruchit? Again, you can give me thumbs up. So option chain is something that will help you to analyze what the market trend is and where the market is currently. So if you want to see what is the option chain for Nifty, you just have to again just run this two lines and you will get to know, okay, this is what is happening. So you get to know a lot of things. So again, these few features are something for really pro traders, not won't be very relevant to you now, but I think if you better know it, maybe in future it will help you somewhere or the other, right? So this gives me a lot of information about this contract, and it's again a really relevant information. Then the most interesting part that we have in Kickstart, I'm not put it over here. I want to show it to you directly on the documentation so that it's relevant for you when you see this. I'll put this link in the chat. I guess I missed that. And just to evaluate this documentation, I'll open for feedback. We are always improving about it, on it. So we have historical data followed by some strategies. So you can see uh, predefined strategies, logic also we have built for our users. And this is a really interesting tool. So I am not sure how many people know about short straddle triangle. Have you taken some trades? So you can again put in the chat or thumbs up that you know about these strategies, or you can also put thumbs down because it's important for me to know that you know it or not. Okay, so again, John C. Hull's book is something that's a must download, as Ruchit had asked us to do. So you can go through that book. You'll get a lot of understanding about straddles, strangles, iron condor, flies. All these things we have predefined, but it's not mandatory to use all, right? As per your requirement, you can use. The point is to give a kickstart. So a lot of people even struggle at building some basic things like short straddle, order execution, and all. So when you use some predefined strategies like this in your program, then your development time drastically reduces and your effort are also put in the right direction. That's the point, right? So and the best part of this library, and this is the last part, so you can hear to the last part, that the best part of this short straddle strategies is that we associate a tag with all these executions. So let's say there is a short straddle I want to do for Bank Nifty. This is a script, and the tag can be, let's say, strategy one. And now if I'm done with that strategy and I want to square that off, we have got over here a square off function that takes care of the reversing of this trade. So what does a short straddle do? It's a small example I'll give. a short straddle of Bank Nifty at 37,000 means that selling call and put options of 37,000 strike price for Bank Nifty at the same time. Okay. When you do that, your position gets opened. That means your money is put into a trade and you will either win or lose your money from that trade. After you're taken this trade, there might be a point where you might want to exit this and you want to book the profit or loss. That's where this function of square of strategy is very important. You just have to pass the tag, let's say strategy 1 in our case, to this function and it will automatically reverse the trades. Okay. And this complete control is given to you in this library where you can, this is an open source library. The code is also open. You can understand, read about it, and try to build your own version of APIs and extend it to your use case. And you can let us know if you have got any problem, some query in this way, right? In this development path. And lastly, we have trading ideas. So for you who are very new to this and you are hearing all these things for the first time, I think trading ideas will be a very simple point to start. I'll try to show if I can now. Just I'm just pasted that, and so there is okay. I don't have the pack. That's why it's not giving me. So if you so we offer some packs also as a part of our offerings. If you have that pack, then you get exclusive trading calls that this is what you have to buy and sell again on the API. So it becomes so just imagine like you are doing some task, you're doing some college project and something, and you're not having the time to even analyze or see the chart. Then it becomes very relevant for to have such some like something like this, something that automates your trading decision making also. Okay, so you can just use this, get some trading data, you can buy substantiate into a code and trade that thing. So all these things are ready available, and all these information also I put it in the chat, in this chat box. So how was this the seminar like? You can now ask me about algo trading. Now I think we have a little lesser audience, so we can have an open discussion because I think most of the people who are really interested are still waiting, right? So Sanskar, you can have an open mic. Maybe someone can question about what he has seen. I can again question, answer that. Hello. Hello, Sanskar.
Yes, sir.
Yeah, we can have an open mic if there are any questions with participants, or like we can even continue.
Fine, we can have that. Actually, okay. If anyone has any question, he or she can raise the hands and I can make him the panelist for a while. So if anyone has any question in the attendees, they can raise their hands.
I think then that sums it up. I think we have already spent in all these 3 sessions. It was a really long one, right? So not sure how many people actually stayed with us for a long time in the algo session, right? So anyways, if there are any other questions and you might not be like comfortable with speaking now over here, you can very well put it on the chat. Uh,
Sir,
and
I
we'll
feel
be
Harsh and Abhishek have their questions.
okay. Should
Hi
we
Ruchit,
consider they can
this
speak
is
like
Abhishek.
even they can Abhishek. Okay, hi Abhishek.
I wanted to ask you talked about we can use this API to create our own service and that we can provide others it as a service by creating our own API and our own algorithms. Can you talk about a little more about that? Like how will that work and how can we
Yes,
utilize that?
so obviously, right? So we are providing the API, we are giving you the wrapper. So if you have the account or anyone, maybe your client, because someone might require your coding skills, right? So not all people are good at coding and trading both. So let's say there is some veteran in trading and he wants to automate his old trading setup. Then they would require some smart coder. Again, they'll come to some IIT college students and they'll ask for them to get some strategies built, right? That's where you should be available and open to tell them that, okay, this is how we can build and this is how 5paisa APIs are free to use. Um, so the APIs, so the thing is that Abhishek, with API, it's the most root possible thing, right? So you can do anything with them. You can build your custom logic, but the thing is that you just need to understand how things work. So for that, this Python library, SDK, and our API documentation, all the things coincide and they'll lead you to a place where you actually learn about the idea is not just to earn from your trades and brokerages, is right. It's the idea is to educate a lot of youth about algo trading and its possible future. So I think that might answer your question somewhere.
Thanks.
So I have two questions. The first one is, should we consider the API for initial stages? The second one is, there are other applications in which we use certain sort of function or mathematical function to do the trading. What is the difference between the API trading and these sort of mathematical trading we do on other sources?
Okay, can you explain me about so initial stages? I think yes, APIs are again that I already told. It's the most basic element. So you should at least understand how to hit APIs. So there are two, three types of methods how APIs are functioning. There's a get API, there's a post API, then there are post, put, delete. All these functions are there. And yes, for initial stages, you should have a prowess of how you can hit an API, post some data to the API, get some data from the API, and use it as per your business requirement, as per your strategy requirement. That answers your first thing, I guess. And the second question was that you're having some platforms where you do mathematical calculation and do some trading, and you want to understand how it is different from building your own algo strategy, right? So, can you tell me about what type of tool you have used? Uh, like, is there any platform you want to highlight?
So normally, almost every platform provides this sort of help to make our own customized mathematical equation for sell and buy. Hold on.
What platform? Because I'm not so. You're talking about a broker, or you're talking about a platform like that we have already integrated.
Sir, the broker. I'm talking about the
So,
broker.
right. So, I'll tell you how it is different. So, in a broker, obviously, if you don't use their API, you might be using their platform. Again, at the back of the platform, mobile or the website, there is the API that is sending your order, okay, or placing something for you. But if you want to use a broker system, you have a lot of limitations that you can only place order at this time, or maybe you have to be present manually to place that order, right? You have to be on the platform, you have to see some on the chart. That is discretionary trading. So if you do some calculation also, but you still have to be manually present when you take an order with your broker platform. But with open APIs and algo trading, you open that you don't have that dependency. Okay, we go beyond limits. You can do anything. If you have a little knowledge about coding, you can actually build anything because it's the most fundamental unit that is the API.
Thank you very much, sir.
Okay. Any other question? I think in the chat. Uh, then we can wind up, like, I guess. Okay. So anyways, I will be still reachable on LinkedIn. If you have anything in person you want to ask, this is my full name. You can, I'm putting in the chat. You can reach out to me on LinkedIn and I'll be more than happy to help
Rishabh,
personally
can
as
I
well.
indulge you a little bit more on that previous question I asked about how we can monetize our own API and our own service with algorithms
Right,
like
right.
coding?
I'll tell you that.
Uh,
So
how is it like legally? How can we do that? Like I want to know about does SEBI have some regulations on it? Like if we can provide that kind of solution or not?
nice question. Like
Something
that's
like
this
that.
is a
Yeah.
nice question. So SEBI regulations are on over extensive usage and abuse of algo trading. Okay, like if you put some fake trades or you do some malicious activity, that's where SEBI will try to restrict you from trading and they will try to block. If you are providing algo trading as a service, I think that is your right question. I can frame it that way, that you want to say that how I can offer algo trading as a service, and you can onboard clients and serve them strategy. I think that is pretty easily doable. Okay, Abhishek. You just need to keep your eyes and you have to be approachable and be a person who can build things for people who have questions, right? You are ultimately answering their automation question, right? So there might be some platforms you can go out, approach people who are actually looking help in this space. But before that, I think you should first experiment on your own account, and you can use 5paisa APIs and infra that 5paisa provides for you to build your own strategy in first.
So for that kind of solution, if I am providing, I don't need to register at some place for with SEBI or
You
something, right?
No, there is not. That's not required. If you have an
Okay,
account
so
with
that will
5paisa, then it's not.
basically be like coding services that we are providing for the client.
Yes, yes, right.
Okay, thanks.
Nice question, then. Okay. Okay, guys. I guess anything else you can personally ask me anytime after the session also. So I think it was a nice session. Like I think a lot of things have been covered from the basics to advanced, and there is we have an account opening offer for you who have stayed for the session, where we are going to give you exclusive 250 rupees of cashback on the brokerage that you are charged for the first month of trading with 5paisa. Okay, and I had been putting some links in the in the meeting. I'll again put that so that you can register. Okay, and I'll put it in the chat. Okay, guys. So this is you can register over here and put your contact number, and your account will get opened in like 24 hours, and you can get started with algo trading easily. Okay, bye, guys.
Thank you, sir, for the session. Thank you to all the team of 5paisa.
Welcome. Bye.
Yes, sir.